So good evening all of you. I hope you all are doing good. Good evening all of you. So in the last session we have started with the one last discussion in the chapter of depreciation, and that was 43A. 43A works in a very specific case, that is if you import an asset and there is a foreign currency loan or a foreign creditor. Then in that case the forex gain or loss on the date of payment, not on balance sheet date, shall be adjusted in the WDV of the block of asset. Okay, it will be adjusted in the WDV of the block. Now pay attention please all of you. For that purpose we have done this particular example yesterday. I guess you have written also this example, which says that in the year in which you make no payment, okay, if no payment is made, you are not going to make any adjustment for forex gain or loss. And if the payment is made, if there is a loss, then you will add back to the cost of asset. If the payment is made and there is a gain, you will reduce it from the cost of asset. Okay. So this is the treatment that you are supposed to follow under the income tax law. Now coming back to the discussion. 43A is very specific to imported asset and foreign currency loan. So I would like to ask you all a question. Is it so that the foreign exchange gain or loss only happens in case of imported asset? The answer is no. The foreign exchange gain or loss can happen on many other things. Like for example, the forex gain or loss can happen on many things. Like, let me tell you, it can happen on, say for example, debtors. Can it happen on debtors also? Forex gain or loss. I have sold some goods on what? In foreign currency, in dollars. And today the rate of dollar is 80 rupees. And tomorrow when the payment is received from the customer, at that time the rate of dollar is 90 rupees. So there is a gain of 10 rupees, right? It can also happen on creditors. It can also happen on other outstanding expenses. Yes or no? It can also happen on forward contracts. Can it? Can we have forex gain or loss on forward contract also? Yes, we can. It can also happen on translation of accounts of foreign branches. What do I mean by this? I have a branch in United States. So if there is a branch in foreign country, I have to merge that branch with the Indian head office to finalize the accounts. You would have done this accounting in your CA inter-accounting subject. Branch accounting, yes or no? So if the branch is in foreign country and if you are collaborating that branch with your HO, then also there can be forex gain or loss. The point I am trying to say is, forex gain or loss can come on anything, not only on imported asset. Similarly, if I buy an asset is bought from India. Asset is bought from what? India, and there is a foreign loan. Is it possible or not? I am buying asset from Chennai, but the loan is in euro. Is it possible or not? It is possible. Then 43A is not applicable. Why 43A is not applicable? Because 43A is very specific to what? Imported asset. 43A will not be applicable in that case. So forex gain or loss can come on numerous transactions, not only on imported asset and foreign currency loan. So how to deal with all these cases? So the government says that all these cases except 43A, which we have already done yesterday, all these cases will be covered in 43AA. Okay, so there is a separate section 43AA, and in 43AA, what is the treatment that we are going to follow? You are supposed to follow the treatment which you follow in what accounts? So what you do in accounts? First, you record the transaction as per today's date. Then on the balance sheet date, do you revalue? Please tell me. Yes, we revalue on the balance sheet date, recognize the gain or loss as per balance sheet date. Are you clear? And once that is completed, on the date of settlement, then later on in the next year, it might be settled now. So on settlement, again, you have to what? Compare with the rate of balance sheet date and check whether there is a gain or loss. Is it clear? And in accounts, where do you take the forex gain or loss? You take the foreign gain or loss to which account? To the P&L account. Here also you are supposed to take it as a PGBP expense or PGBP income. Okay. You have to take it to the P&L account. The difference between accounts and tax over here is you are supposed to take the SBI rate over here as per ICDS. The ICDS says that to compute the forex gain or loss, you are supposed to take the SBI rate. In technical terms, it is called as telegraphic transfer buying rate, TTBR. You might have heard this term in CA Enter somewhere. It is used somewhere in CA Enter in capital gains. Even in CA final it will come. But as of now, for the sake of simplicity, I am saying it is an SBI rate. So you have to convert all the things as per the State Bank of India rate, relevant rate on the relevant date. Whatever is the buying rate of SBI on that date of transaction or on the balance sheet date, so on and so forth. Okay. So there are two provisions over here in front of us. One is 43A, which is very specific to what? Very specific to these two conditions. If you fulfill these two conditions, on the date of payment, you are supposed to adjust. But if the forex gain or loss is on other things like debtors, creditors, outstanding expense, forward contract, translation of accounts of foreign branches, if you buy an asset from India, which is not covered in 43, unfortunately, and the foreign loan, then all these things will be treated as per 43AA. You have to treat as per the accounting treatment. In this, in all these points, there is only one exception. Let me tell you what is that exception. Pay attention on the board, please. In case of forward contract, the ICDS says that you have to settle on the date of settlement. You don't have to settle on balance sheet date. The reason is very simple, because suppose, what is forward contract? Listen carefully. So in here also, forward contract is an exception. Okay. Apart from forward contract, all other cases you are going to settle on balance sheet date and then actually settle on the date of what? Payment and date of receipt. But in case of forward contract, you will recognize the profit and loss in the year of final settlement. The logic is very simple, because in forward contract, what happened? Pay attention, please, all of you. Suppose if I buy some raw material from outside India, listen carefully, please, just wait. Suppose if I have bought some raw material from outside India, today the rate is 70, okay. Now I know that after 6 months, when I am going to make the payment, okay. So after 6 months, I am going to make the payment. That is the credit period which I have taken from my supplier. So today the rate of the dollar is $1 is equal to 70 rupees. I have taken the credit of 6 months from my supplier and I told him that I will be paying after 6 months. And after 6 months, I personally feel that that is my foresee, that is my way of looking at future. I personally feel that after 6 months, the dollar rate would come down, would go up to 80 rupees. Okay. So what generally I would do? I would book a forward at less than 80 rupees if it is possible for me to buy in the market. So I bought a forward at 77 rupees. Okay. Now you know that whatever happens, whether the rate is 80 or 85 or 90, or even if the rate is 72, I have to pay how much? I have to pay 77 only. This is how the forward contract works like. Okay. And therefore, I know that today the rate is 70 and in future, irrespective of whatever the rate would be, I have to pay 77 only, because I have booked a forward on 77. Therefore, the 7 rupee loss is something which I know that I am going to incur. So that loss is to be recognized on the date of settlement. You are not supposed to change that loss on 31st March and then again change that on the date of settlement. Doesn't make sense, because you are aware of that from the very first day, that the loss will be 7 rupees only. There is no second thought about it. Even if the prices of the dollar goes to 100 rupees, my loss is restricted to 7 rupee. So in case of forward contract, you have to adjust it on what? On the date of settlement. Okay. Now just a second, please. Prashant, just wait. Let me complete. So if you come to page number 2.11, just a second, Prashanta, please. If you come to page number 2.11 on the right hand side, let's see when 43AA is applicable. We have seen yesterday when 43A was applicable. So let's see today when 43AA would be applicable. Let's see. Any gain or loss. Any gain or loss is a very, very, very wider sentence. When I say any gain or loss, literally it would contain all kind of forex gain or losses that are possible in this world. But other than 43A, it will not cover 43A. On account of change in the foreign exchange rate shall be income. Any gain or loss shall be what? Income. If it is income, add to the income statement. It is a loss, you can take the deduction as per ICDS 6. Record the transaction as per the rate. So in this case, what is the treatment? Please start your videos. Record the transaction as per the rate on the date of what? Transaction. So if you are purchasing today, record as per today. And then on 31st March, it has to be what? Reinstated as per the rate prevailing on that date. Okay. The way you do in accounts. Just write down in the bracket that in case of forward contract, book profit and loss on settlement. Now examples which can get covered in 43AA. Monetary gain, non-monetary items, translation of financial statements of foreign operations, forward contract, foreign currency translation reserve. All these things just are illustrative list. In fact, 43AA would cover any kind of gain or loss except what? Except which is covered in what? 43A. Anything which is covered in 43A. So the treatment is very simple. See over here. If you are covered in 43A, where you will take the profit and loss? Please tell me. You will take the profit and loss to the WDV of the block of asset, right? And if you are in what? If you are in 43AA, you will take the profit and loss to what? To your P&L account, to your income statement, right? And in case of forward, also you will take to P&L only. But in case of forward, you are not going to do anything on balance sheet date, directly on the date of settlement. Okay. Now there are some illustrations over here to further give us some clarity about how this provision works. So there are some illustrations which I have put in your textbook for your better understanding. All these illustrations are not there in your study material. This is something which is made by us. ICI has not made anything, has not put any provision, any examples on this provision. Let's see. Page number 2.23, all of you, please see on the board, or you can see in your respective books if you have it. X Limited sold goods worth rupees $1,50,000 to ABC Inc. on 25th of September. Okay. So this is the date of transaction. Now, ABC paid $50,000 on 31st December. Another $50,000 on 2nd Feb and balance $50,000 was due on 31st of March. Now you have to first of all answer me which section is applicable, 43A or 43AA? Please tell me. 43AA is applicable, right? Because 43A is applicable in case of what? Fixed asset. This is not fixed asset, this is sale of goods, right? So in case of 43A, what are we supposed to do? First, we will record the transaction. When we'll record the transaction, we'll record as per which rate? Please tell. 25th September rate, because that is the date on which we sold the goods. What is the rate on 25th September? It is 65. Okay. Then what is the next event which happened after 25th September? The party paid to some extent, right? We received some amount. On 31st December, we received $50,000, right? So on 31st December, what is the rate? The rate has increased. So it is a gain or loss? It's a gain for us, right? Because we have recorded at 65. Now we are going to receive, we are going to realize at 65.5. Yes or no? So there is a gain of 0.5 rupees per dollar into how many dollars? $50,000. Are you clear or not? There is nothing great I am doing. I am doing the same thing which you do in accounts. So how much is the profit? 25,000 rupees is the profit. Where will I take this profit? Please tell me. Arey, please tell me, yaar. Where will I take this profit? Palani. P&L account. Take it to the P&L account. Okay. Similarly, what is the next event that is happening? $50,000 we are receiving again on 2nd Feb. What is the rate on that date? 65.4. Okay. So now what is the profit? 0.4 is the profit, right? Into $50,000. So again 20,000 rupees is what? Again gain, right? Both the gain will be recognized in the current year itself, right? What about the remaining balance 50,000? Not received. So shall I reinstate on balance sheet? Yes, as per 43AA, you are supposed to do that thing. So as per that, how much will come? 0.7 is the profit, right? Into $50,000, which will come to how much? $35,000. Okay, can you see this? The calculation over here. Check it, please. First, we are recognizing 25,000 gain, then 20,000 and then 35,000. Is it clear? Total gain of 80,000 will be recognized in the current year. Now, obviously, when this 50,000 will be received, okay, in next year, you will compare the actual rate on the date of realization with which date? Obviously, with 65.7, correct? Suppose in the month of June, July, August, September, whenever the amount remaining 50,000 will be received in the next year, you will compare with 65.7 na? Yes, sir. Okay, that information is not given in the question. Okay, we are supposed to talk about the current year, not about the future years. Now, the second question over here. Let's read. AB Limited has borrowed $3 lakh from CINC on 1st Feb 2024 for business purpose. Okay. Now, on 1st of February 2024, they took the loan for business purpose. When they repaid? On 30th September, they repaid. Exchange rates for different dates are as follows. 1st Feb, 31st March and 30th September. What is the first thing that I am supposed to do? First of all, whether 43A is applicable or AA is applicable? AA. Because it is nowhere written in the section that, in the question that you are buying an imported asset, right? You have to buy an imported asset for 43A to apply. Imported asset is not brought in this question. Okay, is it clear? Clear, sir. So, what is the first thing that we are going to do? We will record the transaction as per 64, right? Then on balance sheet date, we are going to what? Recognize gain or loss? Yes, so, will there be a gain or loss? Loss of 0.66, right? Because earlier we recorded the loan at 60. Now we have to pay 64.66, right? Yes, sir. So 0.66 into 3 lakh. How much it comes to? 1.98 lakhs. Okay, this is the loss that we have to recognize in the current first year. Correct? Now, on the date of payment, further there is a loss. How much loss? 0.23. Correct? 64.66 minus 64.89. Clear or not? Into 3 lakhs. How much is the loss? 69,000 is the loss. Is it clear? Now, the first loss will be recognized in which year? In the first year. And the second loss will be recognized in which year? It will be recognized in the subsequent year. That is in the year of payment. You can see this please over here and you can read the treatment below. Is it clear? Now, let's talk about the third illustration. It's a very intelligent illustration now. Third one. NS Limited purchased machinery for euro 75,000. Okay. Now, we are purchasing what? Machinery, a fixed asset for 75,000 euro on 1st December. Pay attention on the board or books. On 1st December 2023, payable after 4 months. The company entered into a forward contract for 4 months. Okay. And the forward contract says that we are supposed to pay 77 rupees flat per euro. Exchange rate per euro on 1st December, that is on the date on which we purchased the machinery, it was 74. How is the profit and loss on forward contract recognized in NS Limited's return of income? Listen carefully. Please tell me over here. Please see here. Wait. Please see here. Whether 43A is applicable or AA is applicable. 43A is applicable, Venkatesh. If you are saying Venkatesh, 43A is applicable, where it is written in the question that the machinery is imported.
If it's purchased in India, then double A. But if it's out imported,
That's what I am asking to all of you. Is it mentioned the source from where we have bought the asset?
no, sir.
That is not mentioned. Therefore, can we take both the assumptions? Can we take both the assumptions? Yeah. Why not? That is the reason you came late. Palani, I initially told that I asked to these two people also. Is it possible that I can buy machinery from India by taking a loan from foreign bank? Palani, is it possible or not? So I can take a foreign loan, but I am buying from India. Is it possible or not? It's rare, but it is possible. It's rare. It's not very common, but it is possible, Palani. Okay? That is the reason initially when I was explaining now, listen, Palani. When I was explaining 43 AA, see the last point which I read.
Asset from India.
But foreign loan. But loan is foreign. That case cannot come in 43A, na?
Yes, sir.
Therefore, because in 43A, the asset has to be imported.
Yes.
So this will come in 43 AA. Okay? So let's assume both. So if I buy, listen carefully. Listen, if I buy from India, then which section will apply? AA will apply. And if AA is applied, where will I recognize the gain or loss? P&L account. And if I buy from outside India, then which section will apply? 43A. Then accordingly, gain or loss will be done. What effect will be given for gain or loss? It will be adjusted in the WDV of the block of asset. You can just go to the solution if you want. Both the assumptions we are making. Okay. Just for the sake of clarity, we are making both the assumptions. In exam, you can make one of the assumptions if you want. Okay. Need not write both. Okay. Now, one more question is there over here, which is about forward contract. Please read that with me. Mr. X buys a forward contract of euro 1 lakh dollar on 1st Feb 2024 for 3 months at 73.32. The exchange rate was 73 as per euro, 73 per euro as on 1st Feb 2024. On 31st March 2024, the exchange rate was 75. On 15th of April 2024, he decides to sell the contract at 75.20. How the profits are recognized in this case? Please tell me. How will you recognize the profit? You will recognize in the year of settlement directly, right?
Yes, sir.
So how will you recognize? At what price you are selling the contract? You are selling the contract at 75.20, right? Yes or no?
Yes, sir.
And at what price you have got the contract, forward contract?
73.
73.32. So the difference amount will be considered as what? Your income or loss, whatever it is. Okay. And that will be taxable in the year in which you settle the transaction. And it is settled in 2024-25. That is assessment year 25-26. Agree? It is settled in April 2024 na, which is previous year 24-25. Assessment year what? 25-26. Is it clear to everyone?
Yes, sir.
Okay. So this is how. What? There will be no reinstatement on balance sheet date. Okay. Because it's a case of forward contract. Okay.
Why? What is the reason, sir?
That I have told you. Because in forward contract, you know the exact loss which is going to happen.
Yes, sir.
Reinstate happens because we don't know the exact loss. That is the reason we recognize some of the loss in the current year, some of the loss in the next year. But in the forward contract, from the very first day, you know the amount of loss. So that is the reason we'll book directly in the year of settlement itself. Okay. I don't know what treatment you give in accounting standard. I'm not aware of that because I have read accounting standard long back. I don't know the Ind AS implication at all. Little bit accounting standard I might be knowing, not the Ind AS at least. So you have to be very clear in the question that which section is applicable first. If you find imported machinery, imported furniture along with a foreign currency loan, then 43A is applicable. And apart from that, if that is not given, anything else will be covered under 43AA. Is it clear? I hope it is clear. Now we have done almost the entire chapter of depreciation now. There are hardly one or two things which are pending, which I'll be dealing later on the way which I have told you in the previous class also. For example, there is one small ICDS which is pending, and there are some deliberate things which I have left, like some explanations below section 43(1). We have done some explanations, but some explanations we have left, which will be dealing with the chapter of capital gains. Okay. Now, before I go ahead with the next discussion, pay attention, please, all of you. I would like to tell you that where we stand as of now. Long back, I have shown you one chart, that is description of what are the things which are there in PGBP. I'll show you that once again. See on the board, please, all of you. Yes, this one on page number 1.3. The deductions and allowances under PGBP are there under section 30-36 and then 37(1). Section 30-36 talks about two kinds of deductions. One which is available to everyone, another which is available to sector wise. Okay. Now, in the category of deduction which is available to everyone, we have done section 32 and its related provisions. Okay. There are a lot of other provisions which we have to do along with section 32. We have done that, like definition of block, definition of actual cost, definition of what WDV, explanations below actual cost, so on and so forth. There are a lot of content we have done it. So now it is our responsibility to take care of the other provisions given under what? Section 30-36. Okay. So today we are going to do section 30, 31 and 36. Okay. These are the three sections we are going to do today, and if time permits, we will also start with certain provisions of what? Sector wise deduction, if time permit. If time doesn't permit, then we are not going to do that. So right now I am starting with section 30. Pay attention on the board, please, all of you. Pay attention on the board. So what is section 30? These are all small deductions here, nothing great as such. Section 30 talks about rent, rates and taxes, repairs, insurance of what? Of a building. So section 30 talks about four kind of expenses, as you can see on the board: rent, rates and taxes, repairs, insurance of building. Okay. Now pay attention, please, all of you. What is the building used for? Obviously, you should not ask that question at all. The building is used for what? For the purpose of business or profession. There is no second thought in that, right? Building will be definitely used for business or profession. Why should we think about it? Secondly, there can be two possibilities over here, that I am an owner of the building. Okay. I am an owner of the building and I am using that building for what purpose? For the purpose of my business and profession. Yes or no? The second possibility is I am a tenant in the building. I have taken the building on rent, right? And I am using that building for the purpose of business and profession. If I am a tenant, then obviously I will get the reduction of what? Rent which is paid to the landlord. But if I am an owner, obviously I cannot get the deduction of rent. Do you agree? I cannot pay rent to myself now. I am an owner of a building. I am running my own classes over there. Will I get the deduction of rent in that case?
No, sir.
Not possible. Okay. I cannot pay rent to myself. To pay rent, you need to be a tenant, not a landlord. Okay. You cannot be the owner to pay rent. Therefore, the question of rent does not arise to owners. Okay. The question of rent arises only to tenants. Yes, rest of the three expenses will be available to both of them. Second, if I am an owner and if I pay rates and taxes, okay, then I will get deduction. Secondly, if I am a tenant and if I pay rates and taxes, then I will also get deduction. But there is only one condition that you have to keep it in mind, that rates of taxes are allowed subject to 43B. And if I say it is subject to 43B, means it will be allowed on what? If you have actually paid to the other person, that is to the government. Otherwise, it won't be allowed. It means rates and taxes will be allowed to the owner if owner is paying. It will be allowed to the tenant if tenant is paying. Whomsoever is paying, it will be allowed, provided it is allowed only on actual payment, actual payment, actual payment. It is not allowed on accrual basis. Is it clear to everyone?
Yes, sir.
It is allowed on payment basis, not on accrual basis. Third one, insurance. Insurance premium will also be allowed to both. Allowed here also, allowed here also. Whomsoever will pay. If I'm an owner of the building, running my own business over there, running my own classes over there, and if I'm making the payment of insurance, I will get the deduction. If I am not an owner but I am a tenant and I am doing my business in the premise of what? Of tenancy, where I don't own the premise, then also if I make the insurance premium payment, I will get the deduction. Okay, no harm in that. And the fourth and the last expense. Okay, you will get the deduction of repairs over here, but the thing which we have to keep it in our mind, the repairs over here will be supposed to be a revenue repair. Revenue repairs will be allowed as deduction if the owner incurs revenue repair on his building and does business in that building, or if the tenant incurs revenue repair in the building and does business in the building. Both of them will be allowed a deduction of revenue repair, and revenue repair. Capital repairs will not be allowed as deduction. Is it clear to all of you? I'll come to that. Okay, what is revenue repair, what is capital repair, I'll come. Okay, so now if somebody has asked, anyways, it is my duty to explain, and I was about to explain what do I mean by the term revenue repair. Revenue repair means something, just an accounting definition you have to apply. There is no specific definition under tax as far as revenue repair is considered. What is revenue repair? Which does not increase the capacity of the assets. Okay, which is just a normal repair which is done for wear and tear of the property, to improve the wear and tear of the property. Say for example, I am doing some kind of painting work or some small renovation, or some there is some problem in the flooring, so I am changing some floorings. There's some problem in the ceiling, so I am making some plaster in the ceiling. It's a revenue repair. It is not going to increase the capacity of the asset. Now, what is capital repair? Capital repair is anyways not allowed over here. Okay, so why should I talk about it? But I have to talk about it. Sir, what will happen if a capital repair is incurred? Listen carefully. Suppose I am the owner of the property and I incur a capital repair of 50 lakh rupees. What have you done in that? I have made an extra floor in my building. Okay, pay attention please. Here you have to pay attention. I have made an extra floor in my building. Sir, will I get the deduction? Now listen carefully. I would like to ask you all, if I am an owner of a building in which I am running my own classes, in which I am running my own CA practice, okay, I am doing my own business or profession, will that building be there in my block of asset or not? Will that building be there in my block of asset or not? Yeah, I am the owner of the building, I am using it for business. Will that building be there in the block of asset or not? It will be there, right? So you have to add that to the block, right? Add this capital expenditure to the block and claim what? Claim depreciation under section 32. Is it clear? Is it clear? It's very simple. There is nothing great to think. So the rule is very simple. If you incur a revenue expense, claim it in one shot. If you incur a capital expense, add to the asset and then claim depreciation. Okay, shall I go ahead? Now let's try to understand the rare of the rarest case. The rare of the rarest case. Suppose I am a tenant, okay, and there is a landlord over here, okay, and I say to the landlord that I wish to make an extra floor on your building, okay, extra floor on your building. I wish to make an extra floor in your building because your current capacity is not sufficient for my students. There are a lot more admissions than what is the capacity which you are giving me, so I want one extra floor. You don't any expenditure, I will incur the expenditure. And the tenant is incurring what? The capex, capital expenditure of 50 lakhs on the asset of the what? Landlord. Is it possible? Is it possible? It's rare but possible. I am not saying it is impossible. There is nothing like impossible in this. Very few people will do that. If you understand the practicality of the transaction, okay. If we take anything on rent, what is the mentality of a normal person? If we take anything on rent, do we intend to incur a lot of expense on that property?
No, sir.
Never ever, because we know that we are going to leave that property some or the other day. We have to vacate that, right? But here there is some kind of majburi which I have. I know that I don't have any other option except to make a capital expenditure of 50 lakhs and increase the capacity of the building. I did that, okay? So now the question is this building there in my block?
No.
No, it is not there in my block, right? In this case, the building was there in my block, na. But in the tenant case, the building is not there in my block. So the government says that don't worry, this capital expenditure which the tenant is incurring now, we will consider that as explanation 1 to section 32(1). We will consider this as your deemed building. What? Deemed building, and we will give you what? Please say. Depreciation will be allowed to whom? To the tenant. Okay, is it clear? So even if a tenant incurs a capital expenditure on the property of landlord, tenant gets the deduction of depreciation under the income tax law. Is it clear? Now just listen, I am going in future. First year I will claim depreciation. How much? 5 rupees. Okay. Second year I will claim depreciation. How much? 4.5. Right. Now after 2 years, for example, the value of the asset WDV is 40.5 lakhs. Listen carefully here now. Real catch starts now. Now after 2 years, if I tenant say to the landlord that I don't want the property anymore, okay, I am going now. Should the landlord be courteous enough to pay me some money at least? I'm just asking you a simple question. If somebody comes to your building and makes an extra floor and stays on rent for 1 or 2 years and then goes back, should you be courteous enough to pay something to him? Because he has increased the value of your property, yes or no? So indirectly what is happening, you know? Am I transferring a deemed building to the landlord? And in return, suppose if he pays you 55 lakh rupees, how much? Then the differential amount will be considered to be STCG as per the block transfer of block of asset. Are you able to understand? Indirectly I am transferring a block of asset only na. And similarly, if he would have paid me only 30 lakh rupees, then the differential amount will be called as STCL. Did you understand what I said?
Yes, sir.
So this is what this provision is all about. Again, I will repeat. Section 30 talks about 4 expenses. Still it is not completed. Rent, rates and taxes, repair and insurance. Rent is only allowed to the tenant, not to the landlord. Rest of the 3 expenses are allowed to both of them. Rates and taxes allowed to both. Whomsoever will pay will get the deduction. Subject to 43B. You have to pay. It cannot be allowed on accrual. Insurance premium allowed. Revenue repair allowed. Whomsoever will incur will get the revenue. Capital repair also allowed in the form of depreciation. If the owner incurs capital expenditure, add to the asset and claim depreciation. If the tenant incurs, do not add to the asset, make a separate deemed building block. And you can claim that as what? As a depreciation under the income tax law. And in the right hand side, that is year after the lease agreement ends, and if the landlord is making you some payment, obviously think with common sense. If I am incurring 50 lakh rupees on your building, while before incurring 50 lakh rupees, I will have an arrangement with the landlord. I will call the landlord and I will say that, see, I am incurring 50 lakh rupees on your building, a capital expenditure, and your capacity of building will increase. I am anyways going to leave you in next 2-3 years. Yes or no? I cannot take my floor with me. I cannot take that floor with me, na. I have to give it to you. Will you pay me some money or not? The landlord would also agree. Landlord would say, yaar, he is increasing the capacity. If he is incurring 50 lakh rupees after 3-4 years, that the value of the building will increase by maybe 1 crore or 2 crore rupees. Let's pay him some amount, yaar. He is taking all the headache now of incurring the expenditure. I am not doing anything. So in that case, whenever he will make you some payment, you will be liable for what? Short-term capital gain or short-term capital loss. Is it clear to everyone? Now this issue was there in the chapter of depreciation, but we have not dealt that earlier because earlier we were not aware of this concept of deemed building and all. So now because we are aware with the concept of deemed building, we can see this particular case. Come to page number 2.4, all of you. This is the provision of deemed building. This applies when a tenant incurs a capital expenditure on the property of what? On owner. Okay. And then there is an illustration below. Just go through it once. Is it clear? Is it clear? Now, there is one last thing in this section. Pay attention, please, all of you. In section 30, pay attention. Now, this last thing is a matter of interpretation of law. For that, I will make you read the law to some extent. Section 30. An issue with respect to repairs of building. I am a tenant. I am incurring some repairs. Which repairs? Revenue repairs. Will I get the deduction? The answer is yes. But before claiming the deduction, read the text properly. Read the text. Which text? The text of the law. Obviously, it is written in the law, na? I am not saying anything out of myself. We need to read the text of the law properly. What exactly it is written before and after the word repair, when it is allowed. Let me make you read. Pay attention on the board, please, all of you. Now, this is your section 30 and this is the point of your repairs. So, I am just reading it. Pay attention. Apart from rent, this section allows deduction in respect of expenses incurred on account of repairs to building. In a case where the assessee is the owner of the building. So, if I am the owner, I am incurring some repair, it will be allowed as deduction. Okay. Second point. Listen carefully. Where the assessee is what? A tenant who has undertaken to bear the cost of the repairs of the premises. Okay. Read this sentence carefully. So, for tenant, the law says that he has to undertake to bear the cost of the repairs to the premises. Now, what do I mean by that? I'll come to that discussion in a while. But read that sentence once if you want. Once again, the green portion. The assessee is a tenant who has undertaken to bear the cost of the repairs. Then it is allowed as deduction. Now, pay attention on the board, please. What do I mean by this? Can you please tell me? Where he has undertaken to bear the cost of repairs. It means very simple thing. There is a tenant and there is a landlord. Obviously, there is a lease agreement between both of them. Yes or no? In the lease agreement, there might be a clause. Clause with respect to what? Repairing. Will there be a repair clause or not in the deed? In the lease agreement, that in case something happens, who is going to repair, man? I will repair or landlord will repair. Okay. So, for example, if you want the deduction, if the tenant wants the deduction, it has to be written in the agreement that tenant has to write in the agreement that I undertake to what? Say, bear the cost of repairs. Then only the deduction will be allowed to whom? Say please, to the tenant. Otherwise, it won't be allowed to the tenant. There are two possibilities now. That either I will write that I will undertake to bear the repair, or the landlord would say the landlord will undertake to bear the repairs. Either of the two has to bear now. There is not a third person who is going to come and bear the repairs. Therefore, you will be allowed the deduction of repair. There is a condition. The government is not writing. Listen carefully. This is the matter of playing with the words. The government is not saying the tenant would be allowed the deduction of repairs, full stop. No, 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 no. There is no full stop over there. The government says he will be allowed the repair if he undertake to bear the cost of repairs. Undertake means what? What do I mean by undertaking? Agreeing, giving a declaration, right? So, if I am writing in the agreement, is it a declaration or not? So, you have to make it mention in the agreement. Okay, then only you are going to get the deduction in section 30. Otherwise, you are not going to get. Okay.
Okay, sir.
Now, I would like to ask you one question based on this now. Okay, pay attention on the board, please, all of you. Long back, around 10 years back, in 2013, what happened, I will let you know. In Mumbai, we were a tenant of a premise. Okay, there was a landlord over here, and we were running a coaching class. of CA students only. CA inter classes, CA final classes were going on. So we were a tenant, so obviously we had an agreement with the landlord. And in the agreement, it was written that the repairs will be borne by landlord. It means I do not undertake to bear the cost of repairs. In case of any problem, I will say that the repairs will be borne by the landlord. Why so? Because we had a very clear arrangement with the landlord that your property is very old. Because your property is very old, it is your duty to repair it here. It's not a new property. I am not going to repair. Landlord also agreed. He was also not getting a tenant, so he agreed to our point, and therefore we signed the agreement with this particular point. So if anything happens tomorrow, it is going to be the landlord who is going to what? Incur the expense, and we are not going to incur the expense. It's very clearly written in the agreement. Now, suddenly what happened one day? This happened, actually it happened, what I am going to say now, in my lecture only. I was taking a CA inter lecture, and suddenly one fine day, the fan which was moving, it fall down on the head of one of the student. Okay. It happened really. I'm not making a fake story. So it fell down. It was on a lower speed of 2 or 3. It's not on higher speed of 5. But it fell down on the student's head. He got hurt to some extent, not a very extreme kind of injury, but minor injury. No, basically we were scared. We went to the landlord. We said that. Landlord said, I already told you the premise is old. Anything can happen. Okay. So we said the landlord, please make the repair. Now he said that I'm not going to make the repair. He was about to make the repair because it was written in the agreement that if there is any problem in the premise, he is going to repair, but he did not repair. We also cannot leave the classes because the batch was going on, and in between we cannot find a new premise and shift all the students, etc. It will waste a lot of time. So what should we do as a prudent businessman? What should we do as a prudent businessman? Obviously, we will repair it, right? At our end. Yes or no? Yes or no? As a prudent businessman, we have to do it. We cannot wait for the landlord to repair it now. Okay, we have to repair it. We have to check all the possible places where it can happen once again. Okay, so that's not fatal. Therefore, we incurred that expenditure. Now, the question is, will section 30 allow me the deduction? And the answer is no. Why section 30 cannot allow me the deduction? Because it very clearly says that it is allowed if the tenant undertake to bear the cost of repairs. Okay. Now we have not undertaken to bear the cost of repairs. Still we are incurring. Are you clear what I am trying to say? Are you clear? Section 30 will not allow you the deduction. But in such cases, the court says that, and there are many other judgments also which says that you can go to section what? 37(1) and you can claim what? Deduction over there subject to the condition which is mentioned over there. Why? Because ultimately section 37(1) is also about what? Claiming expenses of revenue nature only. And any expense which is not covered in section 30 to 36, it can get covered in 37(1) subject to many other conditions. There are a lot of conditions which you have to satisfy. You might have heard in your CA enter, it should not be capital, it should not be personal, it should not be illegal, etc., etc., etc. So the point I am trying to say is this expenditure where the tenant does not undertake to bear the cost of repair, he will not get the deduction in section 30, but he would definitely get the deduction under what? Section 37(1) subject to the conditions which are mentioned over here. Check it please. This point was one asked in the examination. That is the reason we are getting into so much of depth of the provision. Otherwise, we would have not got into so much of depth of a provision, which is not a very important provision also for exam. Okay. Read this point number 2 if you want. Yes, Prashant, you can ask.
The requirement of undertaken is only for revenue repairs, right? Not for capital.
No, it's not for capital repairs. There is no condition like that in the chapter of depreciation. Okay. Read. It's an important point. You will find some or the other adjustment based on this particular point in your questions later on.
Sir, can't we say that since the landlord has denied to repair and we were forced to repair, and then use the supreme and let it become the case? After the business has come in, we are working for the customers. So therefore, section 30 can't be link everything in section 30 can be claimed.
No, section 30 is very specifically mentioning na, if you want to claim deduction, then you have to undertake to bear the cost of repairs. It means you have to mention that particular thing in your agreement.
Okay.
Is it clear? Now, section 31. Pay attention on the board, please, all of you. Sir, what does it speak? It speaks about repairs and insurance of now other assets, plant, machinery, furniture. Okay. Building is completed. Now let's talk about other fixed assets like plant, machinery, furniture. So again, if you do a revenue repair, it is allowed. Capital repair not allowed. Insurance also you can claim deduction of plant, machinery and furniture. Just wait now. As compared to section 30, what is not covered here is rent. Rent is not covered in section 31. Okay. Section 31 very clearly speaks about only two expenses. Which two expenses? Repairs and insurance. Okay. So what if I take plant, machinery and furniture on rent? Is it possible that I can take plant, machinery and furniture on rent? Yes, it is possible. For example, I am taking a motor vehicle on rent. Can I? Laptop on rent. Laptop is very rare, but still, we generally we do not take laptop. But car is something which is very common, na? So we take common. We'll take some common expenses only. Like we are taking car on rent or some big machineries on rent, which it is not possible for us to buy, right? Something which is very expensive and we need for a very limited period of time.
Rent includes lease also.
Yes, it will include lease also, but all of them are not covered over here. It only covers repairs and insurance. So what if I pay rental for my plant, machinery and furniture? What will I do? Obviously, always remember, if there is no option available in our life, there is only one section which is going to help you, which is that section. You have to go to 37.1 and fulfill the conditions mentioned over there. Okay. Whatever is the condition, obviously, I'm not speaking about that as of now. Whenever that respective section will come, we'll talk about that. Just read it this. It's a very small section, nothing great as such. Is it clear?
Yeah.
Shall I go ahead? Now, let's move on to section 36 now directly. In between, we are skipping few sections as of now, like 33, 34, 35. All of them are based on what? Sector-wise deductions. So, whenever we will be doing sector-wise deduction, maybe at the later half of today or in the next lecture, we'll be dealing with that provision. Shall I go ahead, beta? Now, let's talk about section 36.1. Pay attention on the board, please. Again, a specific deduction which is available to every kind of assessee who is doing business or profession. So again, there are certain small expenses. We are supposed to deal them one by one. See on the board, please, all of you. You have to pay absolute attention on the board now, please. Please. How to read this section? Number 36, subsection 1. And then there is clause 1, clause 1b, clause 2. Okay? Now it is your responsibility and it is your headache whether you want to remember the clauses or not. I would not emphasize on that. Okay? Not very important to remember. Just remember that it is what? Section 36(1). You may or may not remember the further bifurcation of clauses. Please see here, all of you, please. Now what we are incurring? We are incurring again insurance premium. For what? For security of stocks. Does business pay insurance premium for security of stocks or not? The answer is yes. Against the risk of damage, destruction, etc. Like example, right now what is happening in Delhi and the nearby area of Delhi? There are huge floods, right? Because of the over flooding of Yamuna river. Are you aware or not? So there is over flooding of Yamuna river in Delhi and in the nearby area, Gurugram, you can say Ghaziabad and many other places. So there are so many businesses who are getting affected. There are so many personal lives and personal wealth which is getting affected because of that. So if you are doing any kind of insurance for what? Your stock, you will be allowed what? The deduction of that insurance premium under business and profession. Okay. Let's go ahead with the next one. Pay attention over here, please. Don't read. Listen. I am an employer. You are an employee. Does employer take health insurance premium for their employees? Why? So that if tomorrow the employee is unwell, the employee can go to a hospital without any hesitance. They can get admitted and they should not be worried about the bill of the hospital, right? Because the health insurance premium will take care of it. It's a mediclaim which is taken by employer for employee, right? So that is also allowed as a deduction to the employer, because for employer it is a cost, right? If I am an employer, you are an employee, I am taking a health insurance premium for you. So I am incurring an expense for you now. For me it is a cost. Is it allowed? Yes, it is allowed. Under section 36(1) clause 1b, there is only one small condition which you have to keep it in your mind. That is, you can highlight also if you want, it has to be other than cash. It should not be in cash. If the employer makes the payment in cash, then it will not be allowed as deduction. It has to be other than cash. Any mode would be allowed. A bearer check, an account pay check, a GPay would be allowed, UPI payment would be allowed, Paytm payment, everything would be allowed. But don't make the payment in hard cash. Okay. Hard cash payment is not allowed under this clause. Okay. The third one, pay attention please. I am an employer, you are an employee. Listen carefully. And I am making the payment of bonus or commission to you. Okay. Now this is a very interesting point. Pay attention on the board, please, all of you. There is an employer over here. There is an employee over here. And this employer is giving some bonus or commission to whom? To employees. Then it is allowed. But there is one condition over here. It is subject to again what? Section 43B. It means it is allowed if it is what? Actually paid. Okay. If you have paid, then allowed. It is not allowed on what basis? Accrual basis. Is it clear to everyone? It is not allowed on accrual basis. It is allowed on payment basis, payment basis, payment basis. Okay. Now listen carefully. How a private company used to manipulate this provision. Listen carefully. Private company. There is a private company over here in which there are 4 shareholders: A, B, C and D. All of them are equal shareholder. 25% shareholding, 25% shareholding, 25% shareholding, 25% shareholding. Now out of these 4 shareholders, C and D were employees also. They were also employees along with the shareholder. Is it possible? Yes, they were employees along with the shareholder. Okay. Now, the time has come to declare dividends to all of them. Okay. So, I paid 25,000 dividend to Mr. A. I paid 25,000 dividend to Mr. B. Is dividend allowed as an expense under PGBP? Is dividend allowed as deduction under business and profession? You don't have to think so much. No, I am talking as an expense. Is it allowed as an expense to the business assessee?
No, sir.
Allowed or not, Vignesh?
No.
I am not getting your voice.
Yes, sir.
Allowed? How can it be allowed, Vignesh here? It's an appropriation of profit. How it can be allowed as a deduction? Dividend is there. You compute taxes first or dividend? You take dividend first, Vignesh? So how then you are taking the deduction of dividend or you are not taking the deduction of dividend? Not taking na? Is everyone clear or not? Dividend is nothing but withdrawal of profits na? And dividends can be declared from post-tax profits na? Dividends are never allowed as deduction, Vignesh. Therefore, literally speaking, dividend is not allowed as deduction. Now listen carefully what exactly he is doing. Paying 25,000 to A, paying 25,000 to B. See here. How much dividend shall I pay to the third one? Please tell me. I am more sleepy than you, Prashant. Okay, but I am keeping my eyes wide open. Okay, you also have to. You also have to pay attention. Get a tea, get a coffee, get some spray which you can put on your face, or tell your son to spray on your face again and again. Okay, take a water pump and tell him to spray it on you. It's okay, no issue, it happens. I understand. I am also sleepy because the time is so weird now. 6:30 in the evening. It's a time to chill, right? It's a time to relax where we are struggling, where we are working so hard. For me, it's easy because for me, I don't have to apply much mind, right or not? I have to come here speak because I know everything it is there in my mind. For you, it is difficult because you have to focus. You have to pay attention. I agree. But still, pay attention. How much dividend practically I should give to C and D? 25,000 only, right? Obviously, all of them are equal shareholders. You have to pay equal dividends to all of them. But now here I am doing tax evasion. See how? I am paying 5,000 dividend to Mr. C and 5,000 to D. Okay? Only 5,000. And remaining 20,000 I am showing that as bonus. Are you able to understand that what I am trying to do? What will happen because of this? Because of this 40,000 I am treating that as what? Bonus, which is nothing but what? An expense which will go to P&L account, right? But eventually, if you see the substance over form, is this a bonus or is it a withdrawal of profit only? It's a dividend portion only. If this would have been 25,000 and this would have been additionally 40,000, I would have considered that as a bonus. Are you clear? But you are showing disparity in dividends. Right? Dividends are always given equally to all the shareholders. Yeah, even if you are Mukesh Ambani, you are not going to get some extra dividends, right or not? You are going to get a proportionate dividend only what you deserve. You cannot get extra dividend because you are a big shareholder. Everybody would get same dividend. Here we are trying to manipulate the income tax law by showing lesser dividend and transferring that dividend as what? To a different account by the name called as bonus. The government says that not allowed. Where it is written, sir? Let me show you where it is written. Pay attention on the board, please, all of you. On page number 3.3. Bonus and commission 3612. The example is there in the book. You don't have to write it down, okay? These are deductible in full, provided the sum paid to the employees as bonus or commission. Listen carefully now. Listen carefully. Shall not be payable to them as profits or dividend. Okay. So that 40,000 which I am paying, is it payable in the form of profits or not? It is payable in the profit, right? So we are transferring that amount to bonus na. Then it is not allowed. It shall not be payable to them as profit or dividend if it had not been paid as bonus or commission. It is a provision intended to safeguard against a private company or an association escaping tax by distributing a part of its profits by way of bonus among the members or employees of its own concern instead of distributing the money as what? Dividend or profits. Is it clear? Therefore, if you want the bonus now, you want the employee to be given the bonus, give now. I have no problem, give. But then first give equal dividend to all of them. Okay? After that, you give whatever you want to give. Is it clear or not? First give equal dividend and then give whatever bonus you want to give to your employees. We don't have any issue in giving bonus. But you cannot show disparity. You cannot transfer the dividend portion to what? As bonus portion. It will not be allowed as deduction. Is everyone clear? Please tell me. Yes, Palani, say. What is the confusion? Tell me. I'll again read it. These are deductible. These means what? Bonus or commission are deductible in full, right? Provided the sum paid to the employees. How much is the sum paid to the employees in case of C and D? 40,000. As bonus or commission we are paying? Shall not be payable to them as profits and dividend. Can I say that 40,000 which you are paying to C and D is actually payable like profits to them? That's what it wants to say. The bonus amount which you are paying them, it should not be payable to them as profits and dividend. Right? That is actually payable to them as profits na or dividends na, which we are trying to pay them as what? Bonus or commission, not allowed. Is it clear? If we would have given 25,000 to everyone, then this sentence would have not been applicable, because then we cannot say that the bonus is payable in the form of dividend, because we have given equal dividend to everyone, right? Then that bonus is a genuine bonus, okay? But the company will not do that, because if they pay more of the bonus, then obviously their profits will fall, their accumulated profits will fall. They don't want to fall their accumulated profits also, and they don't want to pay dividends also, and they want deduction also. They want everything at their end. Yes, so they can easily do not. See now, please pay attention. Please pay attention. They can do one thing now. They want deduction only now. They want fair deduction, right? Pay 25,000 to everyone, right? And then pay bonus. Now, why are you not doing that? If you do that, you will get the deduction of bonus or not? But they will not do that, because while doing that, their profits will fall now. Your accumulated profits will fall. And because of that, your net profit will also fall. And because of that, your value of shareholder will fall, net worth will fall. Yes or no? They will not do that. They don't want to bear an extra cost also, right? And still they want to what? Save the tax by giving what? Your dividends as your bonus. Okay, are you clear? I hope it is clear to all of you. So, next deduction is a big one and a very important one in 36.1, which we have already had a glimpse earlier of 36.1.3, right? We had a glimpse of this section earlier, okay? So, what is this section all about? Interest on borrowed capital. Can a business in today's time run without this section? It's impossible almost, okay? There is hardly any business which do not have what? Debts. It's hardly any business, right? Every business, whether it is big or medium size, maybe in small business there is no debt. Maybe if it is a very small business, there is no need to have any debt. But if there is a medium sized business or if there is a large business, 99.9% of the cases there will be a debt, okay? And we are fortunate enough in India that at least our government gives us the deduction of what? The borrowing cost. There are many countries in this world where they discourage taking debt. It means there are many countries in which they don't allow you deduction of what? Interest. I'll be talking about that in the international taxation. That what type of countries do not allow you interest cost. And they encourage what kind of financing. Okay, I'll be speaking that sometime later. But I'm talking about Indian income tax law as of now. I'm not going internationally as of now, at least for the first 60 to 70% of the portion. The later 30-40% of the portion will be talking about international taxation. So what is the condition for 36.1.3, sir? What is the condition for claiming deduction? It's very simple. You have to borrow capital. That is, you have to borrow money. After borrowing the money, you have to use it what? For business or profession. And then on that particular borrowed capital or money, you have to pay what? Interest is paid or payable. So the law is very simple. There is no complication in the law. It is not technical enough. It is very straightforward section. Interest on borrowed capital used for business and profession shall be allowed as deduction. Full stop. It just says a single sentence. That's it. But this sentence has great litigation in practical life. The very first thing which we need to analyze over here is borrowed money means what? Borrowed money means something which you have borrowed here. Borrowed means what? You have to return or not? Should there be an element of refund or not? We have to return it. Otherwise, it cannot be called as what? As borrowed money. There has to be an element of refund, first thing. Second thing is a very, very big sentence. Where there are plethora of judgments, there are plethora of disputes and litigations. It should be used for the purpose of business and profession. Listen carefully. What do I mean by this phrase? What do I mean by this phrase? It's a very larger phrase. It should be used for the purpose of business and profession. In business, so we can use the money for a lot of things, yeah. I would like to ask you all some questions now. If I take a loan to pay salary to my employees, will I get the deduction of interest? Yes, it is used for the purpose of business. Likewise, I am asking you some questions, even though the phrase used for the purpose of business is not defined under the income tax law. Similarly, if I take a loan for the purpose of paying what? My suppliers, will I get the deduction of interest? Why not? It is used for the purpose of business and profession. If I take a loan to buy a fixed asset, will I get the deduction? Yes, but the condition is you have to put to use the fixed asset, right? Because till the time you don't put to use, what will happen with the interest cost? It will be added to the cost of asset and then you can claim depreciation. Is it clear? Yes, that is for that there is a proviso in 3613 if you remember. Do you remember that? I have shown you that while teaching you Challapalli Sugar Mills Limited, etc. that there was one proviso below 3613. I'll show you once again now today. So the proviso says that you can use the loan for asset also. We have no issue in that. You can take a loan, buy building, plant, machinery, furniture, whatever you want to do. But you have to put to use if you want deduction in the P&L account. If you don't want deduction in P&L account, don't worry. You can capitalize to the cost of asset till the time you put to use. Okay. Now, let me ask you some questions now. Some practical questions. You can apply your logic and answer. Need not require any practical exposure, but apply your common sense and logic and answer. If I directly say now, you will not remember for a larger period of time. But if I create the situation, ask you a question, then you make a mistake, then you will remember it. Suppose there is lot of loan which I have already taken. Lot of loan. Now I am taking further loan. Already I have taken lot of loan. There is a debt equity ratio of 3:1. I am Adani. I am who? Adani Enterprise. Adani Enterprise is into a high debt equity ratio or not? They are into a very high debt equity ratio, very dangerous for the company. Likewise, Reliance Industry is in a very, I guess that is a 100% debt free company now. Reliance Industry, no debt at all. For such a big group, understand, there is no debt only. That is the efforts which they have been putting for the last 40 years. They have not grown suddenly like Adani. We all know that how Adani has grown suddenly. There is a huge amount of debt. So my question to you all is, can the officer say that? Now if you take any debt, now I am not going to give you the deduction. Can officer say that? Please tell me. No, the officer does not have any right. The law says very clearly what is the duty of the officer. The duty of the officer is to check whether the money is borrowed. He has to check where that money is used. And he has to check whether the interest is paid or not properly. Okay, that's it. And Adani is not defaulting in making the payments. Let me tell you. He has not defaulted in making payments to the banks. He has taken loans, excessive loans. But he has not defaulted. He has always made the payment on time. He might have defaulted in 1 or 2 cases. Otherwise, his credit score is very good. Because he wants more loan, obviously, he will not default. If he starts to default, he will not get loans. So the next question to you all is, suppose if I am going to bank and taking a loan at an inexorbitant high rate of 27%. Okay, I am taking loan from a bank at a very high rate of 27%. Can the assessing officer tell me why the hell you are taking at 27% when others are getting at 10%? Why? Can he tell me, or I should get the deduction of 27%? Should I get? Let me give you one more information for further clarity. The bank from whom I am taking the loan is not my related party. It's an independent party, because in case of related party, you cannot pay excess. Do you remember that? Bank is not my related party. It's an independent party. We don't have any relationship. Tell me please, can the income tax officer tell me that you're not supposed to pay so high in exorbitant high interest, or shall I get the deduction? The answer is, will I get it or not? Yes. The Supreme Court has said that the assessing officer should step into the shoes of the assessee. Okay, and see in what situation he would have taken that particular loan. Am I mad to pay 27% if I'm getting a 10% just to save tax? Then I'm a foolish person, not a businessman. Right? To save 30%, will I pay 100% to someone? Are tax saving is only 0.3% of 0.3 of rupee, paise of a rupee, na?
Yes, sir.
So why will I pay 20% tax, 27% interest, sorry, if I'm getting the same loan at 10% to save tax? Am I mad or what? Tax saving is just a part of your outflow, na? It will reduce your outflow to some extent, right? Therefore, again, the court said that the assessing officer does not have any right to raise any question on the rate of interest at which the assessee has taken. The rate depends upon the many factors in the industry, like the rate depends upon the credit worthiness of the assessee. The rate depends upon how big the concern is. The rate depends upon what is the revenue of the assessee, what is the profit of the assessee, what is the credit score of the assessee, and many other factors. Yeah. Do banks give different rates of interest to different class of assessees or not? Please tell me. Do bank gives different rate of interest to different class of customers or not?
Yes, sir.
Yes, depending upon the type of customer, how old he is, how good a relationship the bank holds with the customers. That much leverage that particular bank has, they can do that. Therefore, the assessing officer cannot raise any question on what? On the rate of interest at which the assessee is paying the what? The paying the interest to the banks or financial institution. It is allowed as a deduction. Okay. Now, the third question which I would like to ask you all. The first question was, can the assessing officer deny that you cannot take too much loan? No, he cannot say. Second question was, can the assessing officer raise a question on your rate of interest? No, he cannot raise the question. The third question now. Shall I ask? The third one. I have taken a loan. Listen carefully. For payment of income tax, will I get deduction of the interest? I don't have money to pay income tax, so I took a loan to pay income tax. Will I get the deduction to pay? Will I get the deduction?
Yes, sir.
Please tell me. I will get?
Yes, sir.
Sure?
Yes, sir.
Sure. Palani is saying yes. Vignesh is saying what?
Yes.
Vignesh is also saying yes. You are into the third year of articleship of CA final. Prashant, you are saying no. Okay, there is a difference in opinion now. Why Prashant? Why no?
The payment of income tax itself is not allowed. So if payment of income tax is not allowed, then interest on it should also.
Prashant has given a very logical answer. I am not saying it is correct or incorrect, but it is somewhat logical. Prashant is saying that if the payment of income tax itself is not allowed, then how the hell the loan taken to pay that amount should be allowed as a deduction? Is he sounding logical or not? If the income tax itself is not allowed, is income tax allowed as an expense under PGBP?
No,
That is not allowed. That I think so everybody knows. There is a specific disallowance for the same under section 40 clause A subclause 2. We will see that later after deductions are over. So if the income tax itself is not allowed as a deduction, okay, then how the loan for payment of income tax can be allowed as a deduction? Let me tell you the answer first, and then I will tell you what the reason behind it. Okay. The answer is, keep it in your mind forever. It's a very important adjustment for exam purpose. It's an academic point, very important point for academic purpose. Interest on loan taken for payment of income tax is disallowed. Disallowed means not allowed. The reason is, let me tell you why. Do you know that income tax is also known as personal tax? Are you aware of this? I am just asking you all. Vignesh, Palani, Prashant. It's a personal tax. It's not a business tax. It's a personal tax. It's your personal liability. It is not only arising because you are business. It arises to everyone commonly. Whether you do business or you do not do business, it doesn't matter to income tax. Is it not chargeable to salaried assessee? Is it not chargeable to house property assessee? Is it not chargeable to IFOS assessee? It is chargeable to business assessees also, the way it is charged to other person. The alternate name of income tax itself is a personal tax. It's a personal liability. Therefore, any loan taken to discharge your personal liability cannot be allowed as deduction. So, if you are discharging income tax, is a personal liability. So, whatever loan you take to discharge your personal liability will not be allowed as deduction. It is disallowed, disallowed, disallowed. Keep it in your mind forever. Don't forget, very important adjustment for exam. Very, very, very important adjustment for exam. My second question to you all is, I have taken a loan for payment of GST. What do you feel? Allowed or not? You have come over here to learn. If you don't know the answer, it's good. It's fine, yeah. You have come to learn over here. You have not come over here by learning somewhere and then you are coming over here to test yourself. No, no, no. You have come to learn. Don't worry. You have to just make an assumption and tell what is your view. Your view might be correct. If it is incorrect, it's all well and fine. If I have taken a loan for payment of GST, will it be allowed as a deduction? Please tell me. And the answer is, it is allowed as a deduction. Why? Because GST is considered as what? As a business tax. It's a business liability. It's not a personal liability. And as against this, do you remember that income tax is not allowed as a deduction, but is GST allowed as a deduction under PGBP? Is GST allowed as a deduction under PGBP or not? I'm just asking you. Are into third year of your articleship.
No, sir.
It is allowed as a deduction, Palani, for your kind information. Okay. Suppose, let me ask you, how much fees you have paid me, Palani? Say 12,000 rupees, for example. Okay. So that 12,000 rupees, does it include GST?
Yes.
Yes. This 12,000 rupees includes, say, 1,500 rupees GST. Okay. Now, is that 1,500 my income?
No.
No, but still I have credited to my P&L account, right? Because my gross fees is 12,000. Now, can I debit that GST on the debit side of P&L and claim that as a deduction?
Yes, sir.
Yes, it means you are getting what? Deduction of what? GST. Are you clear?
Yes, sir.
So GST is allowed as deduction. Why? It is a business liability. It's not a personal liability, for your kind information. As against this, income tax is not allowed as a deduction. It's your personal liability. And at the same time, similarly, if you take a loan for income tax, interest will not be allowed. If you take a loan for GST, income tax will be allowed as a deduction. Is everyone clear? Please tell me.
Yes.
Please tell me.
Yes, sir.
Now pay attention. Further things which I would like to ask over here. There was one assessee by the name called as SA Builders Limited, Supreme Court judgment. This was the assessee who took some loan, huge amount of loan. Huge loan was taken, say for example of 10,000 crores. Say 10% rate of interest. Now later on this loan was diverted to some portion of that loan, say 7,000 crore loan was diverted to a sister concern. Sister concern means to its subsidiary, etc. It was diverted. Okay. So now the question is, will the assessee be allowed deduction of interest on the entire loan? Or the AO can say, you have diverted 7,000 crore to your sister concern, therefore I will do what? Proportionately, say na, disallow your interest. Okay. So that is the issue which came up in front of the Supreme Court in 2000, not in 2000, even before that. It was an old case. So the Supreme Court came up with a conclusion, and the Supreme Court said that every diversion of fund to a sister concern is not a tax evasion. You have to look into the facts and circumstance of every case. If the diversion is done to sister concern and the sister concern is using that money for the purpose of business and profession, then it shall be allowed to the assessee. And if the diversion of the fund is done to the sister concern and the sister concern is using for the personal benefits, maybe for the benefits of the directors, okay, or for the benefits of the promoters, for the personal benefits, then it should not be allowed as deduction. It is a general practice in the industry that generally a company which is a bigger company has a higher probability of getting loans from the banks as compared to a company which is a newly formed sister concern. Like for example, Reliance Industry Limited, it's a 45-year-old company. But Reliance Infocom, it's an 8-year-old company. And Reliance Infocom, under which Jio comes, right? Under which Jio mobile phone, etc., all those things comes. It's a subsidiary of what? Reliance Industry. 100% subsidiary of Reliance Industry. So if today Jio wants loans, Jio has less credit worthiness in the industry, less past experience in the industry of taking and repaying loan as compared to what Reliance Industry has. So if Jio wants money, what does company do? The Reliance Industry takes the loan and divert the funds to Jio, and then Jio will use it for what? For the purpose of business. So every diversion of fund is not tax evasion. That is what the court has to say. You have to see the commercial expediency in doing so. What was the reason that the company is diverting the funds? And you have to look into the facts and circumstance of every case and then decide whether diversion of fund is what? Is a tax evasion or not. So you can come to page number 3.3 and you can read this beautiful case law which is over here from year till year. Read it once if you want. Page number 3.3. Okay. So there are some important points which you have to keep it in your mind forever. Academically, if I say you, ultimately for us, what is important as of now is exams. More important is exams only. We have to clear them first. That income tax point is very important academically. That GST point is very important academically. Do not ever forget that point, please. Those 2 points are absolutely important. They have been testing that point again and again in the examination. Okay. And it is mentioned in your books also. If you want to mark it down in your book, you can mark it down properly over here. That is this particular note over here. Okay. Note number 1, that is notes to 3613 on page number 3.2. This is very important. Okay. And this case law which you have just read now, that has been said by Delhi High Court also, and that has been said by Supreme Court also. Okay. Very recently, Delhi High Court in the case of Reebok India Company has also issued a similar judgment. And this essay builders, it was issued by Supreme Court long back in 1990s. And this Reebok India was issued, I guess, in 2018. Okay. So this judgment, when it came, Reebok India, it gave a reference also of essay builders. The judge said that, see, in essay builders, it was said like that. So I will also say like that only. Because whatever was said in essay builders was absolutely correct. Okay. Now, there is a very interesting issue over here. Very, very, very interesting. Please pay attention. Pay attention on the board, please, all of you. There was one assessee. It's a pure interpretation of law now. There was one assessee and there is one bank over here, IDBI Bank. Now, before that, I would like to tell you one more important thing. Then we'll come to this particular discussion of assessee and IDBI Bank. Coming back to the main section 3613, it is very clearly written in the section. If you want, I can also make you read the provision once if you want from the Bare Act. What exactly is written in the Bare Act? I will make you read that particular thing first. So if you come to page number, that is, I guess it is the third page of this chapter. Let's read the Bare Act once. 3613. Deduction of interest is allowed in respect of capital borrowed, right? You have to borrow capital, right? For the purpose of business and profession, right? In computation of income under the head PGBP. Okay. Capital may be borrowed for several purposes, like for acquiring asset, to pay off debt, for losses, etc. The scope of expression for the purpose of business is very wide. Yes or no? It might include lot of activities. Capital may be borrowed in the course of extending existing business as well as for acquiring assets for extension. And then there is a proviso which we have done earlier, that once the asset is put to use, you will make it revenue, and till the time the asset is not put to use, what are you going to do? You are going to capitalize the cost of your interest. Okay. Then there is explanation 8, which we have already done in 43.1. If you remember, once the asset is put to use, then you will not take that interest to the cost of asset. Do you remember that? We have done all these things earlier. Okay. Now, I would like to invite your attention on the board, please. Pay attention on the board. The point I was trying to say is, whatever I am saying, you will find everything in the book. Don't worry about it. Okay. Whether it is a textbook or color book, you will find everything over there. The flow will be in the same order in which we are doing the subject. Now, you have to borrow the money. Pay attention on the board, please, all of you. You have to borrow the money. That money must be used for the purpose of business and profession. And more importantly, interest has to be paid or payable. The question is whether the interest should be paid or it should be payable. Okay, that is the question. It means I will get deduction of interest on what basis? Payment basis or what? Accrual basis. Okay. For that, we have to see section what? 43B. And in 43B, it is very clearly written that if you take loan from scheduled bank, which bank? Or a public financial institutions which are there in India, like ICICI Bank, HDFC, these are public financial institutions. Okay. Like other Indian banks. So in layman language, if you take loan from scheduled banks, scheduled bank means SBI. SBI is defined to be a scheduled bank. Or if you take loan from other financial institutions like ICICI, IDBI, HDFC, which are Indian banks. Or if you take loan from cooperative banks, which banks? Or if you take loan from NBFCs, non-banking financial companies, which are again registered in India. Okay. It is covered in 43B. And if it is covered in 43B, it is allowed on what basis? Payment basis. It means 43B does not cover everybody. If 43B would have covered everybody, they would have not classified different kind of banks and financial institutions, right? They would have just said that loan taken from anyone, right or not? Yes or no? So what does it not cover? Let me show you 43B once again. I'll show you 43B once if you want. See on the board, please. You will come to know who are covered in 43B. See on the board. Who are covered in 43B? So if I take a loan from any public financial institution, state financial corporation, state industrial investment corporation, etc. Or if I take a loan from certain NBFCs in which there are some amendments, so I have striked off that, because whenever an amendment comes, I generally strike off that and then write the amendment separately below. Can you see this? So that a student can have a special attention on that particular provision. Okay. Or if you take a loan from say loan is taken from a scheduled bank, or if you take a loan from what? Scheduled bank along with what? Cooperative banks, etc., etc., etc. 43B is applicable, no doubt about it. Okay. So if I have a proper look at the section, I'll come to know that 43B is mainly applicable for Indian banks. Okay. It means if I take a loan from Standard Chartered, from whom? Or from Citibank, or from Barclays, or from HSBC, 43B is not applicable. Is it clear? It means in that case, you can get the deduction of interest on what basis? Even on payable basis, that is on accrual basis. Is it clear? Okay. For more information, we'll talk about this in detail in the chapter of what? 43B. Right now, I'm not speaking much about it. Okay. 43B is a separate discussion in itself, and it's a very important discussion from the perspective of PGBP computation also, and also from the perspective of what? Tax audit reporting clause. Because if you go to tax audit report, you will get multiple clauses with respect to what? 43B. Okay. You have to check all the implications of 43B in your tax audit. Now coming back to IDBI Bank and this assessee. IDBI is an Indian bank. Okay. Now this assessee has taken a loan from IDBI Bank. Okay. He has taken a loan for 10 years. Listen carefully. It's a beautiful discussion. We have taken a loan from IDBI Bank for 10 years. Okay. Say at a particular rate of interest. Now after a few years, I went to IDBI Bank. Loan is not for 10 years. Say it is for 15 years. Let me increase the period by some time. Now, after some time, I went to IDBI Bank and I said, IDBI Bank, see, I am your very old customer. Please restructure my rate of interest. I want you to restructure the rate of interest. Restructure the rate of interest means please lower down the rate of interest to some extent. IDBI asked me, why the hell we will lower down your rate of interest? I said them that RBI has reduced the repo rate. So if RBI has reduced the repo rate, you should also reduce the repo rate of the, you should also reduce the interest rate of the customer, na? Especially when the rate of interest is a floating rate, right or not? There are two types of loans, na, which you can take from bank. One is floating, one is fixed, right? The meaning of floating rate is what? If RBI increases the rate, you will also increase. If RBI reduces the rate, you also should pass on that benefit to the customers or not? Now, these banks are absolute looters. What they do? When RBI increases the rate, na, they don't even ask us. They just send us a mail. They just send us a mail and say that from next month your EMI will increase. But when RBI reduces the rate of interest, na, they suo motu do not reduce the rate of interest. We have to go to bank. We have to make an application. We have to pay some charges also to them to reduce the rate of interest. This is the inequality which is there in the banking industry. So when they have to increase the rate of interest, they will increase without informing us in a very formal way. In an informal way, they will send a mail. Most of the time that mail you will find out in your junk box. You will not be able to see also that mail. You would not come across also through that mail. You will come to know when the EMI will be deducted. You will come to know how the hell it has increased. So then you have to go to check. You call the bank and they will tell you, we have sent you mail. Go and check in the junk box or go and check in your main inbox. On this date, we have sent you mail that the repo rate has increased. So they don't practice the same thing when the rate decreases. So the assessee was aware that the rate has decreased. So assessee went to the IDBI Bank and said that, reduce my rate of interest. IDBI Bank said that you have to pay some premium for that. How much premium? Lump sum prepayment premium you have to pay. Pay attention please all of you. Very, very, very interesting case. How much premium should I pay? So IDBI said that you have to pay a premium of 10 lakh rupees. It was a huge loan. Okay. So the IDBI said that you have to pay a premium of 10 lakh rupees. If you pay this premium, we will do what? We will reduce your what? We will reduce your interest rate. So I did my math and I saw that 10 lakh rupees is a very small amount as compared to what is the benefit that I'm going to get in the form of reduction of interest. Okay. So I did what? I paid this 10 lakh rupees. Okay. I paid this 10 lakh rupees to IDBI. IDBI is an Indian bank. Now, the moment I paid this 10 lakh rupees, listen carefully. I took what? The deduction of this 10 lakh rupees. Under what? PGBP. Because this is an expense. So I took that as a deduction. Okay. And this was a business loan. Okay. For your information. So I took the deduction under PGBP. Now, the assessee officer is saying what you know. He is saying me that I will allow you the deduction. but I will not allow you the deduction in one shot. I will allow you the deduction over the remaining life of the loan. And suppose the remaining life of the loan was 10 years. Okay, total life was 15 years and suppose the remaining life was 10 years. So the AO is saying that I will allow you the deduction of this 10 lakhs. I am not saying I will not allow, but I will not allow you in one shot. I will not allow you in the initial year. I will allow you 1 lakh every year. That is divided by 10. So the fight between the assessee and the department was this only. The lump sum prepayment premium which was paid by the assessee to reduce the rate of interest, the assessee was claiming as deduction in one single shot in first year itself. Has the assessee paid it? Yes, assessee has paid it. But the department was saying that no, because the prepayment premium is for loan and the loan is pending for the next 10 years, we will allow you the deduction for the next 10 years in the form of 1 lakh every year. Is the issue clear to everyone? Is the issue clear? Now the question is whether it will be allowed in one single shot or whether it will be allowed in what? It will be apportioned over the 10 years. That is only the question. Did you understand the question? The matter went to Delhi High Court. And the Delhi High Court made a great interpretation. The assessee said that it should be allowed in what? What was assessee's view? Assessee's view was I want 10 lakh. Right? The court asked the assessee, what is the ground you are saying that you want 10 lakhs in one shot? Okay. The assessee said that this lump sum prepayment premium which I am paying now, the lump sum prepayment premium which I am paying is nothing but an interest only. It is nothing but what? It is interest only. Okay, listen carefully. There is a great amount of interpretation in this. The assessee said that it is interest only. And it is in respect of what? Loan which is taken from what? IDBI. IDBI is a financial institution from whom I am taken a loan. And if this lump sum prepayment premium can be called as what? As interest only. And if that it is in respect of a loan which is taken from a financial institution, then this will be allowed as deduction subject to 43B. And in 43B, how the deduction of interest is allowed? Please tell me. It is allowed on payment basis. And have I paid or not? Please tell me. So you should allow me in one shot. Then the court asked, how the hell you can say that this lump sum prepayment premium is interest? Assessee has to prove this or not, that this is interest. And therefore, the assessee was very intelligent enough to prove this. The assessee said that, yes, this is interest. The court said that, can you prove it? The assessee said, yes, I can prove it. The court said, how? The assessee said that term interest is defined under income tax law under section 228A. Where it is defined, I don't know whether you are aware of this or not. The term interest is what? Defined under income tax law under section 228A. Sir, where it is defined? 228A, check. Definition of interest. Read the definition of interest, please, all of you. What is interest? It is defined in income tax law. So if it is defined in income tax law, is it applicable? If it is defined in section 2, is it applicable to the entire act or not? Or it is applicable to the entire act or not? Yes, to the entire 365 sections. Sorry, 298 sections. As per section 228A, interest means what? Interest payable in any manner in respect of any money borrowed or debt incurred and includes any service fee or other charge in respect of money borrowed or debt incurred. So what assessee said? Interest includes not only interest, but it also includes what? Any service fee or other charge. And this lump sum prepayment premium, can I call this as another charge in respect of money borrowed? Please tell me. And therefore the assessee said that this is interest. And once it is proved that this is interest, we have to prove that is the loan taken from IDBI, a financial institution in India? The answer is yes. And if yes, the interest, this prepayment premium will be allowed in how many years? It will be allowed in one shot itself. Are you clear? So this is a beautiful judgment given by Delhi High Court in the case of Gujarat Guardian Limited. You can read the judgment over below, please. Very important judgment. Already 2 times ICAI has asked this. Is it clear?
Sir, why you just mentioned the irrespective of method of accounting at the last, sir?
Because otherwise one would say, the question which is asked by Palani, why it is written that irrespective of method of accounting? Because one would say that I am following mercantile system. Why should I get the deduction on accrual basis? So 43B overrides everyone. I have shown you earlier also, if you remember, it overrides the entire income tax law. It overrides the method of accounting also. It say that is the reason they have to mention this term irrespective of the method of accounting. Okay? Because otherwise mercantile assessee would say, na, what would they say? Why will I get the deduction of interest on payment basis? I should get on accrual basis also, right?
Yes, yes.
Whether you are following mercantile or cash. There are certain expenses which will always be allowed on payment only. There are 6 to 7 expenses are there. And there's a logic behind it. We'll be learning about those logics, why it is so in the chapter of 43B. Okay. So this is where your discussion of interest completes. Now, somewhat similar to interest, there is one more deduction by the name called as zero coupon bond. Pay attention on the board, please. Immediately after section 3613, there is section 3613A, which talks about, see here please, Prashant, discount on zero coupon bond. Now, what is a zero coupon bond? A zero coupon, yes, a zero coupon bond is a bond which is interest, which is a bond which is issued without any interest. You will not get any interest on that. Okay. Now, listen carefully. Suppose, for example, on 13th of September 2023, I am issuing a bond. I am issuing 10,000 bonds. Okay. I am a company. Okay. I am issuing 10,000 bonds. The issue value of one bond is, say, rupees 50 per bond. Okay. The life of the bond is, say, 5 years. Okay. And therefore, the redeemable date of the bond after 5 years would come to 12th of September 2028. Agreed? Because the issue date is 13th of September 2023. Okay. Shall I go ahead? And suppose the redeemable value of the bond is rupees what? Is rupees 100 per bond. Okay. Is it clear?
Yeah.
Now, the question which is there in front of me is, what is the cost to the company? See, it's 50 rupees is the cost to the company, because today, when we are issuing the bonds, the company is issuing the bond at 50 rupees. So today the company is going to get how much money? 5 lakh rupees, right?
Yes, sir.
10,000 into 50. Now, after 5 years, the company is supposed to pay 10 lakh rupees to the investors, right? Therefore, 5 lakh rupees is the cost. That cost is nothing but discount given by the company now on issue. How much is the total discount? The total discount is 5 lakh rupees. Okay. Now, how will this particular be allowed as deduction to the company? The law says a very simple thing. This will be allowed as deduction to the company over the life of the bond. Now, what is the life of the bond? How to determine the life of the bond? Just wait. The law says that do not determine the life of the bond based on number of years, but determine the life of the bond based on number of months which are there from the date of issue till the date of redeem. So we are not supposed to find out how many years it is. We are supposed to find out from date of issue till the date of redemption how many months it is. Months. Okay. So how many months are there from this date till this date? How many months are there? Now wait. Before that, we also need to find out how many years are there over here. So which is the first year in which you are going to get the benefit of deduction? The first year is going to be previous year 2023-24, right? This is the first year you are going to get the benefit of deduction, na? Because the deduction of 5 lakhs will be apportioned over the years. Okay. Second year will be 24-25. Third year will be 25-26. You tell me, where should I stop? 26-27. 27-28. Shall I stop or shall I write one more year? One more year. 28-29 also. Right? So there are, in now if you see properly, from this date till this date, the year is 5. But the financial years are 6 now. Because there are 2 incomplete financial years. Which are the incomplete financial years? The first and the last year is the incomplete financial year, yes. So we have to apportion this 5 lakh rupees over these 6 years. Yes or no? Not over 5 years. Yes or no?
Yes, sir.
So the government says that do not divide by 5 because the number of years are actually 6. Therefore divide by months. Okay. So how many months are there? Just wait. From year till year. Don't count. Wait. September 2023 to September 2028, we are supposed to compute the total number of months. Here also there is a catch which the government says. The government says that while computing the months, if there is a part month, not the complete month, like September is a part month, not complete month, it is not there from the very first day, right? We have issued bond on 13th of September, yes or no? So if the company has issued the bond during the month, middle of the month, okay, and if the company has issued the bond for 15 days or more, for how much?
15 days.
If the company has issued the bonds in a month for 15 days or more, then you take that a month as a complete month. Okay. So if the company has issued the bonds for how many days? 15 days or more in a month, then take that month as a complete month. Count that or else ignore it. If it is less than 15, then ignore. Okay.
Okay.
Likewise, so for example, in September, the company has issued the bonds for how many months? For how many days? Sorry, in September 2023, 18 days. 13 September to 30th September, company has issued for 15 days or more or not? So it consider September 23. Okay. Then October obviously will come, November will come, December will come, January will come, February will come, March will come. Yes. So in the first year, how many months will be there?
7 months.
In the next year, 4 years, obviously complete 12 months will be there.
Yeah.
And in the last year, how many months I should take? April, May, June, July, August. Shall I take September?
No, less than 15 days.
Less than 15 days. We are redeeming in 12 days, right? So only 5 months. Is it clear?
Yeah.
So if I take the total of all these months, it will come to 60 rupees. 60 months. Okay.
Yes.
Therefore, if I take the discount, it will come to 8,333 per month. And then I will multiply that with per month. I will get the deduction every year. Are you clear?
Yeah.
The point I am trying to say is do not divide this by
Yes.
year. If you divide this by year, then you will never ever get the correct answer. Are you able to understand?
Yeah.
Because the total number of years in which you are going to claim this deduction is not 5, it is 6. Therefore, divide by months. And while dividing by months, while considering the month, the government also gave a provision that if there are 15 days or more, consider that. If there are less than 15 days, then you have to ignore that particular month. Okay, is it clear to everyone? Okay, yes, Prashant. Yes.
I have a conceptual question. It appears that the principle in this section 36(1)(3)(a) is contradictory to the principle in 36(1)(3) where it's
That is the reason they have made a separate provision.
Gujarat, in this Gujarat Guardian Limited case, because I can very well structure a zero coupon bond that you first lend out the entire amount and just repay back immediately the entire principal, and then it becomes a zero coupon bond in financially.
I didn't understand. I didn't understand you.
Like instead of giving us, if I'm a bank, instead of giving a zero coupon bond, I can very well structure my loan as a normal bond.
Now let me tell you, it is not allowed to issue zero coupon bond by every SSE. Zero coupon bond is allowed by the government to be issued only by certain category of SSE. Shall I show you that? Then your question would not be relevant. Right, Prashant? Prashant is saying that we can structure in some or the other way by considering the provisions of 36(1)(3) and 1(3)(a). But you cannot play between both of them. You don't have an option. Let me tell you why. There is a definition of zero coupon bond over here. See, it can be issued only by the infrastructure company, only by the infrastructure capital fund or public sector company or scheduled bank or infrastructure debt fund. That's it. No other person in this country can issue zero coupon bond. Check. There is a definition of zero coupon bond under income tax law in section 248.
Scheduled bank as well?
Yes, it includes scheduled bank also.
The receiver, does he have to be a specific kind of a person?
No, he can be any person. The investor can be any person. It's very clearly written. These 5 people can issue the bonds. Investor can be any person. They don't mention about investor. And the condition is the bank, whomsoever is issuing out of these 5 people, should not receive any money till the last maturity. Whatever they receive is on maturity only.
Still that issue remains.
Okay, you can continue to ask the question. Yes, please continue, Prashant.
Okay.
Yeah.
If I'm a bank and I want to circumvent the provisions of 3A, which is the zero coupon bond, and rather I want to apply Gujarat Guardian Limited case, what I can do is, so I don't want, I mean, the SSE, who is the receiver of the loan, who is paying the interest, he doesn't want to pay the interest month-wise over a period of time. So instead of coming under 3A, he wants to come under Gujarat Guardian. What he can do is he can structure the loan, he can ask the bank to structure the loan instead of a zero coupon bond, a regular loan.
Okay.
He pay the present value of the interest payments.
Who will pay?
The receiver of the loan.
Why the receiver of the loan will pay? Because the bond is not issued, Prashant, by the investor. The bond is issued.
The bank issues the bond, of course, but he wants a zero coupon bond. Okay, but he does not want to come under the provisions of 3A. Instead, he wants to come under the provisions of Guardian.
How is it possible? Because the lender and the borrower changes in both the case.
Lender is the bank. Okay.
In zero coupon bond, lender is not bank, na. In zero coupon bond, lender is the investor.
But here it's mentioned.
Arey, bond will be issued by the. Arey, Prashant, you have totally misunderstood the concept. In zero coupon bond, who will be the lender?
The lender would be the bank.
How bank will be the lender? Bank will issue the bond and investor will give the money to bank.
Yes.
How can you mix both the concepts here? You cannot mix.
The receiver is the.
In zero coupon bond, who is the lender? Investor is the lender, na?
Got it.
Yes or no? And bank is issuing you the bond, right?
Right.
And bank is paying you the kind of discount, is a kind of interest only now over the period of time, right or no? Arey, you cannot compare zero coupon bond with your normal transaction of what? Normal transaction of your loan. In loan, what happens? You take loan from bank, right? In zero coupon bond, you are not taking loan from bank. You are giving money to the bank and bank will repay you after 5 years. Are you clear? 3613 and 13 are exactly opposite of each other. You cannot compare both of them. Okay. Now, Palani, you had a doubt. I'll come to you just in a while, Palani. In the meanwhile, all of you please do one thing. That is, you go through this small illustration which is there in the book, which is somewhat similar to what I have done just now in the class. Okay. Is it clear? It's a similar illustration with the just change of certain dates and certain amounts. Okay. So the important sentence over here is in the easy notes, you can see the life should be counted in months and not years. Otherwise, you will make a mistake. And while counting months, if the bonds are issued for 15 days or more, then take it as a complete month. Okay. Clear? Yeah, not relevant, much relevant for the day of exam. That is the reason we have not mentioned in, nobody is going to ask you in CA final exam definition of zero coupon bond. If they start to ask such things now, And if you start to revise such things on the day of exam, then you will not be able to complete the syllabus. Okay, nobody is going to ask you the definition. If they start to ask such things, then your fate is absolutely brutal. You have born with a brutal fate then.
I think one mistake that CA students tend to do is get scared by 5 to 10% of the exam paper.
Yes.
5 to 10% of the exam paper is
That is the biggest problem of CA student, what you said. Prashant, because he is experienced, he has seen industry, he knows, he has interaction with lot of students. He has said absolutely correct thing. That CA students get scared of 5 to 10% of the paper. 5 to 10% of the paper scare you and make your job wrong for the remaining 90%. Should not get scared of the 5% or 10% of the syllabus or paper. Okay. So we should be intelligent enough to know exactly what should be done before the exam and what should not be done. So if I also as a teacher, just understand, if I want, I can sit on this definition and I can continue discussing this definition for 45 minutes. I can do that. Okay. What will I do? I will start to analyze what do I mean by infrastructure capital company. I can do that or not? Okay. I can sit and I can discuss how infrastructure capital company is different from infrastructure capital fund. Then what is a scheduled bank? Is the term scheduled bank defined under the income tax law? Yes, it is defined. What is an public sector company? Is a public sector company. I can do all these things. Okay. But I know what is relevant for exam and I know what is not relevant for exam. Yes, in practical life, if you are calculating this deduction for a infrastructure capital company, then you have to do the analysis. Then you have to decide, you have to go and check whether your company is eligible to be an infrastructure capital company or not. Your entity is eligible to be infrastructure capital fund or not. But academically, if they start to ask such things, then direct tax cannot be given in the form of a closed book. Closed book is not possible then. Then let them open the book and let them test whatever they want to test. Okay. Let them say to the student that you can bring whatever you want to, and then you can, like it was there in earlier in paper 6. Okay, elective paper. So we need to understand that what is relevant, what is not relevant. Okay, Palani. That is the reason I have not mentioned also here. Because I know now out of experience over the last 10 to 12 years, I am teaching around 20 to 25 attempts. I have seen my students giving exams. They have not tested obviously on such irrelevant things. Why? First of all, this section itself is irrelevant. Why it is irrelevant? Because it's very sector specific. It's not available for everyone. So this section itself is not important for exam. Okay. They have never ever asked any question also based on this, nor any question is there in your study material also based on discount on zero coupon bond. The question which is there in our textbook, that is our question. That is not ICI's question. You will not find a single question based on zero coupon bond in your study material. It's not an important provision. But the provision which I am going to say now is extremely important academically also, is extremely important practically also. At both the level, it is extremely important. Shall I? Now I am talking about certain employee related benefits. Pay attention all the group. Suppose there is an employer. Okay. See on the board, please. Please, all of you. There is an employer. Okay. Now, employer is making some contribution to certain funds like recognized provident fund or superannuation fund, etc. For the benefit of what? Employee. Then the employer will get deduction under section 36 subsection 1 clause 4. Okay. Do employers contribute to the PF and all for the employees or not? Yes, they do. So they will get the deduction under section 36(1)(4). Okay. Similarly, this was the first deduction. Second one, if employer contributes to certain funds like pension fund which are approved. So now employer is contributing to a fund which is a pension fund, which is approved pension fund. This is also allowed as a deduction under section 36(1)(4)(a). But there is a restriction over here. The deduction will be maximum equal to or less than. It will be maximum equal to 10% of the salary. It cannot be more than the salary amount. Okay. Let me explain you further about it. Sir, what do you mean by the term salary? Salary here means basic salary plus DA, dearness allowance, which is there in terms of employment. So you might be knowing in CA Inter, if you have done salary, salary has different meaning in different provisions. Yes or no? At some places, salary includes bonus also, commission also. It includes other allowances also. At some places, salary includes only basic salary. At some places, salary includes basic plus DA in terms. Yes or no? Salary has different definitions. Now, there are various components of salary. Salary includes perquisites also. Yes or no? Salary includes different kind of allowances. So, your salary means what? Basic plus DA in terms. Okay, it means the deduction over here shall not exceed 10% of the basic salary plus DA in terms. For example, the basic salary and the DA in terms is 30 lakhs. Okay, and if you are contributing how much? 4.5 lakhs. How much? 4.5. You are not going to get 4.5 lakhs. You will only get how much? Only get how much? Only 3 lakhs. That is 10% of your basic plus DA in terms. Is it clear to everyone? Please tell me. I will not get into that as of now. I'll be discussing that later on. Don't worry. Whether the DA in terms is what, DA not in terms in what, I'm not getting. You have done your entire CA Inter Palani, where every place it was written salary includes basic plus DA in terms, DA in terms, DA in terms. You are not aware of that. I will speak about it at some time later. Okay. Right now, I'm not speaking. Now, pay attention, please, all of you. What is the third benefit which the employer is doing? The third benefit. Employer is contributing to certain gratuity fund. Approved gratuity fund, again approved, all of them should be approved by certain authorities. Gratuity fund, this is also allowed as a deduction under section 36(1)(5) now. Okay, so see on the board, please, all of you, where is employer contributing? First, employer is contributing to certain provident funds. Second, employer is contributing to certain pension funds, but in pension fund there is a restriction, not more than 10% of salary. And then he is contributing to certain what? Please say. Gratuity fund. This 10% of salary point is very, very important for examiner. They test this again and again in the examination. Always they ask this particular thing in the PGPP total income question, that this much is the salary, this much is the basic plus DA in terms. Tell me how much will be allowed. You have to restrict yourself to 10% of the basic plus DA in terms. It cannot be allowed more than that. Yes, please ask.
Excess of 10%, can it be allowed under general?
No, it cannot be allowed under general deductions also. Anything excess of 10% will not be allowed in general deduction also. Okay. Now, try to just remember the type of funds. Will you be able to remember the type of funds in which we have contributed just now? I have highlighted them in green. Will you be able to remember that? And remember the second one, this 10% category is very, very important. They test on this particular point again and again. Is it clear? Now, all of them, that is all three of them, are allowed as deduction subject to 43B. Means what?
It should be paid.
It should be paid. It cannot be just a journal entry in the books of accounts. Okay. The employer would get the deduction if he has actually contributed to the fund. Okay. And not made just a provision. Okay. Is it clear? If the employer has actually contributed to the fund, then he will be allowed. And in 43B, you have to make the payment till which date? Do you remember that? You can make the payment till the due date of what? Filing of income tax return, ITR. And what are the due dates of filing ITR under the income tax law? I can ask such basic questions. I have not taught you, but I can ask, yeah, this much right I have to ask you, being a CA final student. What are the due dates under the ITR? It is either 31st July.
30th September.
No, it's not 30th September. What are you saying, Palani? 30th September is not the due date for filing of return. 30th September is the due date to file tax audit report. The due date to file the return is 31st October. Yes or no? And for transfer pricing assessees, it is 30th November, right? These are the three dates. If you don't know, it's fine. I'm not expecting you to know. You will say, sir, I have practiced in audit, sir, I don't remember the dates. It's okay. I'm not blaming you for not remembering. It's okay. We will be doing obviously the provisions of filing of return later on. At that time, we will learn the due dates. Don't worry. But I have to tell once, because 43B implication, whenever it will come, I have to speak about the due dates. So these are the three sections. Please try to remember what? You can read this much if you want. Okay. And then I'll speak few things regarding this provision only. I have to speak few things. This second one is very, very, very important. They test this point again and again. Okay? Now, pay attention, please. I have a very simple question to you all. Pay attention, please. Suppose this is financial year 2023-2024. Okay? And I am an employer. You are an employee. And your salary is approximately a lakh a month. Rupees 1 lakh per month, approximately. Okay? Now, my question to you all is, I have a very simple question to you all. The question to you all is, how provident fund works? Suppose if I open a recognized provident fund account for you, okay, I will contribute what? Rupees, say 5,000 from my pocket. My pocket means it is whose contribution? Employer's contribution. Will I get the deduction of the same under the business and profession? The answer is yes. Just now we have seen 36,114. Yes. Now, is it the only amount which goes to the recognized provident fund? No. At the same time, we also deduct a similar amount, if not exactly same. Deduct from employee salary, yes or no? Are say na. Provident fund works like this only na. So we have deducted how much? Say somewhat similar, say 5,000 rupees only. Let's keep it simple. So when I will make the payment of salary to my employee of 1 lakh rupees, I will not make him payment of 1 lakh. I will pay him only how much? 95,000. And I will say that I'll pay you 95,000. 1 lakh is your CTC na, cost to company. Right or not? That is your gross salary. The gross salary and net salary has a great difference. Yes or no? It has a difference of approximately 30 to 40% in reality. Prashant would know that if he is doing a job, I guess. You are into job, Prashant, or business?
Now semi-retired.
No. When you were working, you were doing a job or you were doing a business?
Throughout my life, only salary.
Salaried. So you might be knowing what is CTC and what is in hand. Yes or no? And you have tasted the tax provisions of different countries, right? So in most of the countries, the tax rates are more or less similar only for salaried assessees, right?
I face zero tax as well in Kuwait.
In Gulf countries, there are zero taxes, definitely. You enjoy, but the cost of living is very high over there.
Once when you get used to paying zero taxes, it really hurts.
It really hurts, right. So now coming to the discussion, I will pay only 95,000 to the employee. I am not going to pay entire 1 lakh rupees to him because I will deduct that 5,000 rupees from his pocket. Okay. Now suppose, listen carefully now. This is the salary of April, for example. Okay, April 2023. Okay. And our company has a tendency of paying the salary by 5th of the next month. So on 5th May, we did what? We paid the salary. Okay. We can also pay by the end of April also. Nowadays, it happens that we pay by the end of month itself. Payrolls have become very fast these days. Earlier, they used to take 1 week at least after the month to pay the salary. But these days, we get the salary credited by the end of the month. Now, 5th May, I paid the salary. Okay. Shall I go ahead?
Yes, sir.
So now what the government says, very important provision. So can I say on 5th May, employer has deducted 5,000 rupees from employee salary?
Yes, sir.
So the government says what that, listen carefully. Suppose this is the PNL of the employer. Okay. On which date I am deducting 5,000 rupees? On 5th of May. Okay. The government says that 5,000 rupees which you have deducted now from employee salary. Okay. That is that employee salary, that employee's contribution to provident fund is your what? Say na. Is what? Is your, please say, is your income now. Now, I would like to ask you, I am an employer, you are my employee. Okay. I am deducting your 5,000 rupees from your salary, keeping it with me. Obviously, in next few days, I am going to pay that to the fund, right? Is it my income? In reality, in real terms, is it my income? It is not an income. But income tax law has defined income or not? Please tell me.
224.
Where it is defined? Please tell me.
Clause 24.
2 clause 24, they have defined the term income? The answer is yes. So in this, if you see, They have defined this particular thing as an income. Now, why they have done so, that I am coming to. That logic I am coming into. Okay. First of all, whether it is an income or not, we have to see that. Okay. See this. Point number O. In the first chapter, is the definition of income. Can you see that? Amount, any sum received by assessee from his employee as a contribution to what? Provident fund, superannuation fund is an income. Now the question is, why the hell the government is making this as an income? This will come to our mind or not? Is it my income? Am I supposed to pay tax on such amounts? No, the government is saying, if you are honest enough, nothing will happen to you, don't worry. The government says that, when have you deducted this? I said on 5th of May. The government says that pay this as per the due date of the relevant fund. Relevant fund means provident fund. What is the due date under the provident fund? If you remember, if you have done tax audit, you would know. If you have not done tax audit, you would not know. What is the due date under the provident fund? It is 15th of the following month. So when I deducted this contribution is for which month? It is for April 23, right? So you have to pay this April contribution by which month? By 15th of May? Array, April contribution I have to pay by 15th of May, right? So the government says that if you pay this by 15th of May, by which May? By which date? 15th of May. Then we will give you the deduction of this 5,000 rupees, and this 5,000 rupees will be nullified from your life. So if you want the deduction will be allowed if paid. If paid till what? The fund's due date. Listen carefully. The fund's due date. This is given under section 36(1)(5)(a). That is the fourth section that we are going to see. Listen carefully now. Why the government has done so? The logic is very simple. The logic is very simple that if you are deducting somebody else's money, is it not your responsibility to pay that to the respective place as soon as possible? Please tell me. Suppose if today I say Prashant comes to my house. So I tell Prashant that, Prashant, I am giving you 10,000 rupees. Okay. I gave him an envelope of 10,000 rupees. And I said Prashant, that Prashant, please give this to Palani. Palani is your what? Is your neighbor. I do not have time to travel to his place. So what is the duty of Prashant? Please tell me. By when he should give? After 6 months? Huh? After 1 year? As soon as possible, right? Maybe in next 1 or 2 days or 3 days or maybe a week's time. So this is the same thing which is happening. Is the employer taking the employee's money in his hand or not? So the moment he is taking the money in his hand now, the government is making that as income, so that he should be aware that he has to pay that 15th of this month. Yes or no? Otherwise, he will not get the deduction if he pays on 16th. And if he does not get the deduction, what will happen? Please tell me. It will be, this 5,000 will be added to his income and he has to pay tax on that amount. Are you clear? Now there is one very important thing which I would like to tell you, which I will again make you read. First of all, you can read this from here, that you have to pay this by which date? If you want the deduction of employees' contribution, you have to pay this by which date? Due date of the relevant fund. Whereas the employer contribution, if you want deduction, you have time till which date? Please tell me. Till the due date of filing of return. So I would like to ask you one question. This is financial year 2023-24. Okay. This is a very important issue academically. Very, very, very important. See on the board, please, all of you. This is financial year 2023-24. Okay. This is employer contribution of March 2024. Okay. And this is employee contribution of last month, March 2024. Okay. And this assessee is a company. When does the company files the return? Company files the return on 31st October 2024. Everybody knows that? Say na, company always have a due date on October na. Company is never filing on July. July is not for company. It's for individual, HUF, farm, LLP, all these small assessees. Companies will always file in October. Now the question which is there in front of you all. If I pay this contribution in the month of September 2024, whose contribution? Employer contribution. Will I get the deduction under PGBP? Will I get? The answer is yes, because this is subject to what? 43B, and in 43B you have due date of filing of return till time, yes or no? But if I pay this contribution by the month of September 2024, am I going to get the deduction of employees contribution? The answer is no, because here it is written that this is somebody else's money. You have to pay that by 15th of the following month. Are you able to understand? The employer contribution, you have employer contribution is your own contribution, right? You can pay till the due date of filing of return. There is no harm. Income tax will allow you the benefit. But employees contribution, there is a stricter time limit on it. Employees contribution will first become your income. And if you don't pay by 15th of the following month, you won't get the deduction. It will be part of your income forever. Is it clear to all of you? No, it is gone. This employee contribution is of which month? March. What is the due date to pay employee contribution? 15th. Even if you pay on 16th of April now, which 16th of April 2024, it is gone. Nothing can be done about that particular item then. And that is the reason if you file a tax audit report, do you remember that you give a 12-month annexure? In tax audit report, you have to give a 12-month annexure of employees contribution, which date it was paid, employer contribution. You have to make that disclosure. Okay, so be very careful. It's a very important point. And therefore, I will be discussing about this issue once again when I'll be doing 43B. Right now, I have not done a complete discussion. Just a second, Prashant. So whenever 43B I'll be addressing, I'll be discussing. So you just make sure that you write down here also if you want. If you want, just make sure that you circle this and write down on left hand side. You can make the payment till the due date of filing of return. But here you can circle, here you can write down, you have to make the payment by 15th of the following month. Even though it is written below, you can see. But still, you have to make it very, very clear at your end. For employer contribution, you have a longer time to pay. But employees contribution, Prashant was asking, what if I pay in the next year? Forget about next year, Prashant. Even if I pay instead of on 15th of April, on 16th of April, still it is not allowed. Please.
In case of employer's contribution, if I pay after the
In 43B, it is allowed even in the next year. In 43B is a temporary disallowance. It's not a permanent disallowance. So I will be dealing with that in 43B. Don't worry. Okay. But employee contribution, the government is very, very strict. It is somebody else's money. You have to pay it to the relevant fund on or before the time. And all these things are having relevant references in the tax audit report.
Yes, sir.
Different clauses are there for all these things. And for this one, so you have to give a 12 months annexure also.
Yes,
April contribution, amount, due date, amount, date on which it was paid by employer. Right? This is how you write down. Earlier, I guess government used to give some 5 days ka grace. Now I think so they have removed that 5 days ka grace. Now there is no grace period. Earlier, the government used to give grace of 15 plus 5 days. So if it is 15th April, even if you pay till 20th April, it was allowed. But I think so they have removed now very recently in last few years. Okay.
okay, sir.
Now pay attention, please. Last 1 or 2 deductions we'll just see for today and then we'll continue in the next session. One very small deduction, nothing great as such, not at all important, but these 4 were extremely important. Mark down. 3613 was extremely important. 3613 and these 4 were also extremely important. Now there is a small deduction allowance for animals. Why the hell I will buy animal here in the business? Please tell me. I am not buying them as a stock in trade. Please let me tell you. Otherwise you will say you will buy animal to sell. I can buy animal to sell. If I am buying an animal to sell, that is my purchase cost. Okay, that will be allowed as a deduction. Don't worry. Apart from purchase cost, I am not a trader of animal. If I am not a trader of animal, why the hell I will buy the animals? Please tell me. And which animals? And why? Give me some examples fast. Horse, why you will buy horse? A horse race? Okay, fine. I can accept that. You can buy horses for horse race. Okay.
Aquarium
Aquarium, that is not animal, that is fish. Fish and animal is different. Is fish? Fish is different, na? I cannot treat fish as an animal. Birds is different, animal is different, fish is different. All these things are different creatures. I cannot term them. Anything else? You can buy some, what, Prashant? Cows for what? Dairy purpose. Yes, you can buy cows for dairy purpose. Buffaloes for dairy purpose. Yes, you can buy that for agriculture purpose. Yes. But agriculture is not a taxable business. It's an exempt business. Though why the hell that I will claim deduction under agriculture business? Tell me something which is taxable, right or not? Deduction makes sense for taxable business now. Deduction doesn't make sense for exempt business. You might buy some dogs for security purpose, right? You might buy some camels for transportation in deserts. You might buy some, say, some donkeys, etc. for the purpose of what? Transportation, right? There might be various animals which are used in business. So, whether the deduction will be allowed or not? Yes, it will be allowed, but how it is allowed? It's allowed in a very strange manner. Suppose I bought an animal today for say 30,000. Okay, this is the cost. You will not get the deduction today. Listen carefully. You bought in financial year 23-24. You will not get the deduction today. Then when will I get the deduction, sir? When that animal will become useless or it is dead. So whenever that animal is useless, it is dead, and whatever money you have received out of the sale of that animal, okay, whatever money you have received out of the sale of that animal. So suppose if it has become useless, you have sold it for a marginal amount, say 5,000, 10,000 rupees. Maybe the animal is old now, it is not useful, so I am selling it. Or maybe the animal is dead, so I am selling his carcasses. Okay, his dead body I am selling to someone so that someone can make some use out of it, maybe for the purpose of leather or some other purpose, right? So at that time I will get the deduction. How much deduction? Whatever is the cost minus whatever is the sale value you have received. Say you have received 5,000 rupees. So the differential amount is how much? Please say. 25,000 rupees will be allowed as deduction to you. Is it clear to everyone? So not a very important section. Anyways, it is not going to be useful in our day-to-day lives. Have you ever seen any animal in your any of the assessees, any of your clients' balance sheet? Have you seen? Please tell me. So these are just worst case scenario deductions. It might be useful in 1 out of 1,000 cases. Okay, not very important for exam also. But it is my duty to explain you that it will be allowed as deduction in the year of sale in which it has become useless or it has become dead. So you can just highlight these two words, useless or dead. Okay. So till the time the animal is alive or it is absolutely functioning, you will not be getting any kind of deduction. Okay. Now the next deduction I am keeping on hold. It will take time. It's a bigger one. It will take at least half an hour to 45 minutes to address this. We'll be doing that on Monday. So I'm taking one very small deduction for today, that is 3619. Okay. Again, this is an hopeless deduction in today's time. Expenditure on promotion of family planning amongst employees. Okay. Now this is the first deduction under the income tax law so far, which is only allowed to companies. Circle it, please. This deduction is not allowed to individual, HUF, firm, LLP, cooperative society, trust. It is not allowed to any person except company. So this is only allowed to company. Okay. Now what kind of deduction is this? How it is related to business here? I am Tata, I am Reliance, I am Adani, and I am creating awareness amongst my employees regarding what? Family planning. And in that process, I am incurring some expenses. So the government is giving me that deduction. How this family planning promotion can increase my production? How that can increase my sales? Is it a business expense? Honestly tell me. It's a social welfare. Yes or no? It's a social welfare or not? It's not a business expense, honestly speaking. Now, why this provision was introduced? This provision was introduced in 1968, Finance Act 1968. Okay. So you can go to the income tax law and see the year in which it was introduced, 1968, long back. Long back, the government of India realized that the population can be a big problem in future. At that time, there were very less ways of communicating with people. What was the way of communicating with people at a larger scale? Maybe a radio, right? Maybe radio was there through which we can communicate with people, right? At that point of time, around 55 years back. I don't think so there is any other way you can communicate. There was any other way of media communication. Television was not there in India at that time. Or even if it was there with very elite class of people. Very few people. Not everybody had television. Radio was the only common communication system which was there with the people of this country. Apart from that, newspaper might be there, yes. Newspaper were there. Apart from that, billboards, etc. Few billboards might be here and there. It's not like today, where if you want to speak, if you want to say that from today, 12 a.m., 2000 rupees notes and 500 rupees notes will not be applicable, will not be a legal tender. The Prime Minister has to say just 4 hours before, right? That's it.
Condition is because of this.
Yes, yes.
Main reason of demonetization was not India, it was Pakistan.
Right. So just 4 hours before, the point I'm trying to say, even just 4 hours before, if he's saying it is spreading like anything across the country in 2 hours, right or not? So it's very easy to communicate today. There are so many social media handles, there are so many WhatsApp groups, there are so many places where the government can what? Initiate anything, they can communicate anything they wish to communicate to the people of this country. But at that time, it was not that easy. So the government thought what? Let's target companies. Why? Because companies have huge employee base. And in every company, that in big companies at least, there are lakhs of employees who are working, right? The lakhs of labor class, skill class, unskilled class, all kind of employees are there. So they thought that let us target companies and let the companies take this responsibility on their shoulder and let them create awareness amongst their what? Employees, that it is important to plan your family. You just imagine that, just go back 1 or 2 generation, okay? Your grandfather's generation, just go back. Everybody who is listening to our lecture, I can guarantee that 90% of the people will say that yes, that generation has lot of children. Agreed or not? Yes or no? Our grandfather will have five brothers, 4 sisters. Yes or no? There was no awareness at that time. They did not knew that what can be the possible harmful effects of increasing the population, which we are facing now. Come to Mumbai, you'll come to know what is the problem of population. Okay. Sitting in Goa, it's very, very chilled and relaxed over there. Chennai is also better than Mumbai as far as population is considered. It's at least better than Mumbai and Delhi at least. But Mumbai, you come to know what exactly population is. You come to travel in Mumbai in local train, you'll come to know what population problem can do to a country, how it can ruin our day-to-day life. So they thought that let's create awareness. So the company said that yes, we take the responsibility on our shoulder. We will create awareness, but that will need some money now. We need to incur some expenses for creating awareness or not among employees. We have to keep some seminars. We have to keep some. We have to bring some speakers, influential speakers who can speak on behalf of the company to create awareness. We will need to incur some expenses here. The company said that we will incur the expense also for the sake of the country, but at least give us what? Give us what? At least give us tax benefit, yeah. So the government said that we will give you tax benefit. Don't worry, okay? And the government said that if you are incurring a revenue expense, what? Then we will allow you fully. Okay? The way any revenue expense is allowed, fully only, na? But if you incur any capex, like if you have purchased some air condition to be installed in the auditorium, so it's a capex, right? So if you incur any capex, then we will not allow you fully, then it will be allowed in 5 equal installment. How much? In 5 years. Is it clear? Is it clear? One more thing. Let me tell you. Suppose now this is the P&L of a company, because this deduction is only available to company. It's not available to others, right? Now suppose there is a sales of the company of 100 lakhs, okay? And there is an expense of company of around say 120 lakhs, okay? And there is a revenue expense on what? Family planning, say of 5 lakhs, okay? Because the company has incurred family planning expenses at their end. And there is also a capex of on family planning, okay, which is 1/5. Okay, I'm not taking entirely because only 1/5 is allowed, okay? So I'm only taking 1/5 in the current year deductions. Say that is 10 lakhs, okay? And there is unabsorbed depreciation also, sorry, there is depreciation expense which is of 15 lakhs, okay? So just see the nature of expenses which I am putting. This incurs all your operational expenses like purchase, like salary cost, etc. Okay. This incurs your social welfare expense like revenue expense. This is also allowed as a deduction under PGBP, right? This is also a social welfare expense. Maybe you would have incurred 50 lakh rupees. So you will be allowed 10 lakhs in the current year. Okay. 1/5 in 5 years. Okay. And this is your depreciation allowances, which is there on your plant, machinery, furniture, building. Now, what does the income tax says? Listen carefully. Here there will be a loss, obviously. Okay. How much is the loss? 120 plus 5, 125, 135, 150. 50 lakhs is the loss. Okay. Now, the income tax says what? We all know that. This depreciation will be treated as what? Please tell me. This 15 lakh loss will be treated as what? I have explained you. This will be treated as what? Unabsorbed depreciation. And it will be carried forward and set off against any income except salary for infinity. Yes? It will be carried forward and set off till infinity, na? Against any income except salary, right? Now, this 20 lakhs will be treated as what? The business loss, right? It will be carried forward for 8 years, etc. Whatever is the time limit. Okay. Now, this 5 lakhs will also be treated like a normal business loss only. Okay. It is just like a normal other revenue expense. Is it clear? Is it clear? Shall I go ahead? One last thing. What is left? Capital expenditure of family planning, right? How much it is? 10 lakhs. So the government says that this capital expenditure of family planning will be as good as UAD. It means this 10 lakh rupees of capital expenditure of family planning will be treated same as this 15 lakh rupees. Are you clear? It means this loss of 10 lakh rupees will be allowed to be carried forward and set off against what? Any income except salary. Up to what? Up to infinity. Just see this over here. Just see this over here. Unabsorbed capital expense shall be treated as UAD. And again, now you see this over here. What I am trying to show you, which I did not show you yesterday, which I have told you I will interlink later on. Now, can you appreciate this particular point which we have written below the discussion of unabsorbed depreciation in the previous chapter? See this. Can you see this? Still one more item is there. I'll come back to this page once again. The unabsorbed capital. So the government is encouraging you, yes or no, to incur such expenses which can create what? Which can control the population, right? Which can help in controlling population. So government is saying, don't worry if you are incurring losses because of capital expenditure of family planning. We will treat it as good as UID. You can set off against any income up to infinity except salary. Is it clear to everyone?
Yes, sir.
Okay, so this is what this provision is all about. I don't think so this provision will last for the next few years. Government has, I think so, they have not able to see this provision. They have not paid much attention on this provision in today's time. Is there any need to do all these things? Is there a need for company to promote all these things? The government can put one advertisement on television and that is much more than sufficient. Yes or no? Or they can circulate on WhatsApp. There are a lot of, everybody has phone these days.
Even if companies do it, I mean, it's still for the larger purpose of their employees' welfare, so it's business expense. And
How it is? No. How it will affect how it will help the business?
welfare.
It is for employees' welfare, na. It is not for the company's welfare. It should be for company's welfare, not employees' welfare. It's debatable, you can say. Maybe it is allowed. Maybe it might be allowed in 37(1). Yes, but capex won't be allowed, na? Okay. So we'll stop here and we'll continue the discussion of 36 in the next session. And then we'll move ahead with what? The big one, and that is what? The sector-wise deductions. Okay.
Thank you very much.
Thank you.